I am CA Rupal Jindal, wishing one and all present here a very good evening. It gives me immense pleasure to extend to you a very warm welcome in the virtual CPE meeting series on technology as enabler of internal audit, organized by Internal Audit Standard Boards of ICAI and hosted by Jalandhar branch of NIRC of ICAI. CA Charanjot Singh Nanda, Chairman, Internal Audit Standard Board ICI, could not join us because his presence was elsewhere needed. We will have to start in his absence. I would like to take the opportunity to call upon the virtual dais CA Sonia Arora, the Chairperson of Jalandhar branch of NIRC of ICI, for her opening remarks.
A very warm good evening to all. My sincere gratitude towards the Internal Audit Standard Board of ICI, especially a dynamic and super energetic Chairman CA Charanjot Singh Nandaji and an humble Vice Chairman CA Anil S. Bhandari in absentia. Thanks for giving Jalandhar branch an opportunity to be a host of this wonderful webinar. I heartily welcome the eminent and intellectual speaker of the today's session, CA Bhargav, CA Praveen Kumar and CA Jayanta Chatterjee. We are fortunate to have among us the expert from Malaysia also, who is having an immense knowledge of the topic, technology as enabler of internal audit. We all know that internal audit need to be more proactive in identifying and mitigating risk, and not just assessing the control already in place. And one of the identified challenges for internal audit is to use more technology, data, and analysts in their audit approach and methodology. So technology is the future we all know, and it can be rightly quoted as next generation of internal audit. So adopting new technology typically results in more automation, which enables internal auditor to move away from repetitive and mundane tasks towards more strategic assignments. Thus, I appreciate this section of the topic, selection of the topic of the today webinar and efforts of the Internal Standard Board for increasing our knowledge horizons. Last but not the least, I welcome all the participants of this session and moderator CA Rupal Jindal. Now I request Rupal Jindal to please moderate the session.
Thank you, ma'am. Let us proceed towards the technical session. The area of discussion for a session 1 is key challenges in internal audit, which will be covered by our experienced speaker, CA Praveen Kumar ji. CA Praveen Kumar is a professional with over 30 years of post-qualification experience, which includes working on large number of risk advisory assignments, audits, forensic fraud investigations, and IFRS transition for various corporates. He is presently a senior partner and national head of assurance division of ASA. He has been a member in various research groups and committees of ICAI. He has been invited to present paper by reputed institutions in Japan, Nepal, Myanmar, Dubai, Singapore, besides various large companies and branches of ICI across country. It is a privilege to call upon CA Praveen Kumar to take over.
Thank you so much. Thank you so much, Sonia ji, for giving me this opportunity. And I'm grateful to Nanda ji for inviting and recommending my name. Actually, when I came to know that this is for Jalandhar branch, I had someone, in my house also feeling very happy. My wife is from there. So, so whenever we go to Jalandhar and, we really like those sweets. So, which are very, very popular from there, lovely sweets.
Yeah. So then we plan seminar too for you. Instead of webinar, I will plan a webinar seminar too.
Yeah, then those sweets from lovely sweets.
Yeah, lovely sweets.
Yes, very, very popular. And so it's really a privilege to be with all of you. And of course, this internal audit topic is very close to my heart. So today what I will be doing is I'll be sharing my small presentation with all of you. This presentation is, on challenges of what we face in internal audit. So I trust that many people who are attending this session are small and medium practitioners. and some of you might be working for corporate also. So what I'm going to do is I'll be sharing more from my personal experience rather than on a theoretical side. So this presentation will have case studies. It will have some interesting insight into when you are doing an internal audit, what are the red flags you should be careful about, and ultimately the challenges which internal auditor will face, whether working in the company as internal audit department or as an external firm which is helping the company in doing internal audit. So I believe I will have approximately 40 minutes time. I'll try to justify the time which you are spending here. So first and foremost, the main challenge we face in auditing, that what is the purpose, what is our role as auditor. So there are different hats, which are worn by the people who are doing auditing. They are sometimes called ears and eyes. They are sometimes policemen. They are sometimes, we read in the books that we are working as watchdogs. Then there are consultants, there are catalysts. So when we do internal audit, please remember that we cannot work as a policeman. And this is the main challenge which the internal audit team face. They ask a lot of questions, and their tone of the question is that, which puts off the people who are in the process or who are, on the business side. And the cooperation is out of the, window. So you're a policeman when you're doing work as forensic auditor. So that role where you are collecting evidence, and you're trying to prove a point, which so then you can say that, okay, I am working as a policeman. So if you're doing a statutory audit, then you're more like a person who is sitting outside and making a noise if something is going wrong. That is the watchdog. But nowadays that role is also undergoing a lot of change, because the regulators and the society at large, they expect auditors to go beyond just being the watchdog. Consultant, of course, when you are doing internal audit, you are working as eyes and ears of the management, because the role which is given to the internal auditor is specific to the requirement of the management. And also there is a need of having internal auditor in the regulations, in the statute also. And many times the internal auditors plays a role of catalyst, connecting different departments and different companies all together. Now, one of the main challenge which an internal auditor face, anything goes wrong in the company, the first question is asked, कि आपके internal auditor क्या कर रहे थे? Where were those internal auditors? And for any internal auditor, it is very, very critical to understand what is fraud and how this fraud can be identified, how it can be prevented. So let us spend some time in having an understanding that how these frauds can happen, and how internal auditors should be careful when doing the audit, that the person should be able to bring out the facts which are there. So before going to specific, there was, there is snapshot of a study which was carried out by ACFE. This is, extract from a report which is given by ACFE, report to the nations. And some very interesting facts this report has. So this organization studies the frauds which happen across the countries, across jurisdictions, and will come out with the data which is very, very relevant for all of us. It says that, if you take overall total turnover of companies, and if you take expenses because of or the loss because of the fraud, so you can reach out to a number of 5%. Approximately 5% of the turnover is lost in frauds. this report also suggested, that anticipated number of fraud was huge number in terms of USD 4 trillion. But some more facts this report had given, and I'm sharing it with you. 85% of the fraudsters, they had never been convicted or charged. So, and never been punished, or terminated. So basically, I can share with you one example. There will be many case studies which I'll be sharing, but some experience I can share with you. We were, doing audit of a company, and we realized that one particular person at a very junior level was doing some small little fraud in terms of, spending less money and claiming more money from the company. So the point was raised, and the question was raised on it, what are the internal controls, and the management said, it is difficult to have one more supervisor because that cost will be very high when we compare the cost of loss we are having in this place. So उन्होंने उसको थोड़ा सा, they gave him a little bit of scolding and then told him not to do this again. And this example, when we extrapolate, so in large number of cases, these people who are doing frauds, this is what came out in the study, that 85% cases, they were never convicted. So internal control weakness was responsible for nearly half of the frauds. And, most of the frauds, approximately half of the fraud, 50% of the frauds were caught by way of tips. Somebody came to the management and told something is going wrong, and then that's how it was caught. Few frauds were detected by internal auditor, approximately 15%. 13% were detected by the management themselves, and 7% frauds were detected by accident. Somebody was working and doing some kind of mischief, was not on that seat. Somebody else went to the seat and realized something is going wrong. By accident, the fraud came into picture. So this came out from this study. Now, asset misappropriation and financial statement, there are two kinds of frauds which happen. So when you are doing internal audits, please remember there are two ways, two broad categories of frauds which we look into. One is where the assets are misappropriated. That means there is some small little theft which are happening. The number of cases of such kind is very high when the study was carried out, but the loss was comparatively low. And second type of fraud was financial statement fraud, which was very huge in number. The impact was big, but in terms of number of cases, these numbers were 10% of the cases. But basically, the end result was that out of all these frauds where this study was carried out, 53% of the organization, they recovered nothing from these fraudsters. So some more data from these from this study. So the study said that there are red flags. 85% of the cases, the fraudster which carried out these fraud, that displayed at least one behavioral red flag. So, and this slide is very important for all of you. Just keep this slide in mind. And if somebody tells you that, okay, today there was a webinar on internal audit. So what was the crux? What did you learn out of that? So this slide can be, if you understand this slide, then I think your time will be worth. So what this study said, that when they studied all the frauds across jurisdiction, across the globe, they found that in 85% cases, one of the behavioral red flag was visible when the people were doing the fraud. So first one, the people who are doing the frauds, they were living beyond means, and it was visible in 41% of the case. So I can also share with you that when we were doing, some investigation, So we realized that, one person in that company was living beyond their, so he was having big cars and was purchasing nice flats. And when you compare the salary which that person was taking, it was almost impossible to have that kind of wealth which that person had created in 2 3 years. So living beyond means is one of the red flags. But please remember that this is red flag. It does not mean that everybody who is spending more money and smoking costly cigarettes and spending a lot of money does not mean that he's carrying out a fraud. It is one of the red flag. That means you need to be careful. That means you need to be careful while carrying out the internal audit and specific transactions related to that person. Be a little more careful. There are chances. Then financial difficulties is also one of the red flag. So, in one of the case, one of the example which I can share with you, there was audit of a bank which was being done. And as a practice, the first thing which people go and do audit, do internal audit in the branch of the bank, they count the cash. And it was found that cash was short by very small amount, 5,000 rupees. So later on, it came to light that the person who was a cashier was needing, he required some money for treatment of his son who was unwell. And because it was the last date, so his salary had finished. So instead of borrowing from the market or somebody, he just picked up that packet from the cash box, knowing that nobody is counting cash every day because he and the manager will have one key each, and manager would largely be dependent on him before signing off on the cash book. So financial difficulty he was going through, and that's why he picked up that packet and went home. And next day the inspection happened. So he was thinking that, okay, fine, I'll, in couple of days when my salary will come, I'll refill that cash. But actually financial difficulty is one of the red flag. And that person carried out that fraud because of this. Then unusually close association with a vendor or customer is also one of the red flag. So many times when you will go to do an internal audit, and let us say it is a manufacturing company, and when you look inside, you realize that the person who is responsible for procurement is having a very good relationship with the vendors, the suppliers, or one or two are very, very close to that person. So that is a red flag, because unusual close association means that there is a possibility that they might be giving him some kind of favors, or some kind of misappropriation might be happening. Then excessive control issues or unwillingness to share duties is also one of the red flag, which this study has brought out. It said that many times the fraudsters, when it was seen that those people were not very much willing to share their duties, everything was being done by their own. So when you look at these web series on the Netflix and Sony, and you realize that the person who is doing fraud, he will do everything by himself. Even in Nirav Modi case, you see the bank, the person who was on that seat, who was doing activities which were out of the books, that person was doing all the activities by himself and never allowed anybody else to come to his seat and do that exercise. So that excessive control is also one of the red flag. Then refusal to take vacations. This is one of the red flag which is globally accepted. And that's why a lot of large corporate, they make it compulsory for their people to go at least once on vacation, and somebody else will be doing their jobs. So recent family problems is also a red flag. People may get pressurized. Later on, we will see that fraud triangle. So one of the pressure comes when that person is going through family problems, and they would try to justify and do rationalize their actions. Then there is something which is called green flag. So that means too good to be true syndrome. Like, for example, employee, a small time employee of a company is going on vacation by air with family and not taking any advance, and everything is being paid by his own pocket. So sometimes you wonder that, it looks like too good to be true. That person might be having other priorities. So, but this syndrome is one of the red flag. It doesn't mean that the person is certainly carrying out a fraud. There may be a possibility. Then abnormally slow in performing routine work, that we have seen in many organizations, where you feel that the person is extremely slow. He is not able to find the file also, and once the corruption is there, some bribe is given, their file is immediately taken out. So this is also one of the red flag that people who are carrying out the fraud, they deliberately slow down the whole thing. And the study also found out that those people who are carrying out the fraud, they were isolating themselves socially. They were not mixing around with many people. So these are the red flags, and at least one of the red flag was visible in 85% of the cases. So that means once you are doing an internal audit and you are you are sensing that, okay, this can be the red flag we need to be careful about. This can be too good to be true, or this person is absolutely control freak. So you need to be a little more careful. You need to keep your ears and eyes open before you actually give your report. So fraud triangle was given by Donald Creasy. It says that on one side there will be pressure, like motivation or incentive to commit the fraud. Second will be the rationalization. Every person who will carry out the fraud will have some kind of rationalization on the back of the mind. So the person will always have a justification and the opportunity, the knowledge and ability to carry out the fraud. When we looked at that, example which I shared with you, the bank cashier. So there was a pressure. His son was unwell. He was not having money. He didn't want to borrow from outside. So he was having a pressure of, money. So there was a pressure. So, and there was an opportunity. He was aware that the manager will not be going to the cash room to count the cash. He will just sign off the cash book and will, lock the room, strong room with the second key. So he was having an opportunity. He knew that nobody is going to check the cash. And rationalization. He said that I'm not stealing money from the bank. He said that today is 29th and on 1st I'll get my salary and I'll refill it. I'm doing so much for this bank, and it is only 1 or 2 days that I'm using this money. I'm not stealing away the money. So every example, every fraud which you will see will have these three pillars, these three angles to it. There will be a pressure, there will be an opportunity. That means the knowledge and ability to carry out the frauds, and there will be a rationalization. Everybody who does the fraud will always have a rationalization. That means there will be a justification why that person carried out the fraud. So when you look at financial statement frauds, or you look at Satyam, or you look at other frauds which have taken place, they would say that, okay, we thought that it's not bad. After some time, we will, bring the money back. So it's okay. So sometimes people say we are not going out of the accounting standards. So whatever. So if there is a loophole in the accounting standard, or if there is some kind of interpretation issue in the triangle, in the financials, in the accounting standards, why don't use that to your advantage? So there will be pressure. Pressure can be market pressure also, that I wanted my share to be at a particular place, and if I do not give this much results, my share price will come down. So there will be pressure, there will be rationalization, and there will be an opportunity. So this fraud triangle will always be complete. So when you are carrying out your internal audits, please remember there will be red flag. You need to be extra careful. And when these pressures are there and these opportunities are there, please remember the moment this triangle gets complete, the fraud happens. Now let us look at the genesis, how the frauds they start. Many times unnoticed error and gain from the past experience. I'll go back to the example which I shared, the bank cashier. So in the past there was an error in calculation and nobody noticed it, and next day when he counted, he realized, oh, there was a mistake, but nobody noticed. So there was something which he was aware of. So these unnoticed error, they are the ground for these frauds. Then system deficiencies and complacencies and weak internal controls. So these are all they bring the genesis of the fraud. They all result in beginning of the frauds. And many times accounting knowledge is not that much at the top level executive, and there is too much of dependence on the people. And they say that, okay, our person is been working there with us for very, very long time, so he's very, very reliable person. But trust me, wherever these frauds were caught, many times I have seen that people who have been working with that organization for 15 years, 20 years, whenever there was a pressure or the triangle gets complete, they would always be having a justification in their mind, that I have done so much for this company. What is wrong if I am, taking some advantage here and there? So, especially at the time of COVID and the time of pandemic, when everything is happening online, I was, the other day I was looking at one of the discussion. So said that one interesting fraud which has started happening is that the people have picked up two jobs. One job in a morning shift and the second job in the evening shift. And because they are working from home, they do not have to go somewhere and just have to log on. Even if they are late 10, 15 minutes, it doesn't matter. So the kind of frauds which are happening, it's crazy. And this time has given opportunity to the people also, because many times the physical controls also play a very important role. So let us go to some of the case studies. When we were doing audit of one of the construction engineering site, so I sent my team there, and then we realized that so many things were going wrong in that on that site. So and it was, the frauds were happening left, right, and center. I mean, in the case of raw material, in case of dealing with the subcontractors, in case of material supply, financial leakage was happening everywhere. So the material, when they counted, when they did physical count of one particular type of the material, which was relatively more costly, they realized that, okay, the books were showing X number, but actually the physical count was quite less. So then they realized that there is something which was leaking out. And later on, we realized, because the component was very small. So the style of, leakage, pilferage was very unique. People used to carry their lunch boxes, huge, big lunch boxes, and will enter into the factory and will keep it somewhere in the store area. And then after having lunch, in the same lunch box, they will put those components. And some of the people, 2 or 3 people were doing that. And they were, taking away those small components. So it was also the person who was head or the in charge of that plant. So that person was also involved, and that's why he did not bother too much about small little leakages happening. The truck came and our team was there. They found that, okay, they the good receipts and all, it was stamped, and before they started downloading, before they actually sent the truck out, they realized when they counted the material which had come, was less than what was mentioned on the invoice in the good receipt. So suppose there was a good receipt, or the invoice was for 100, the material which was downloaded was only 97. Nobody bothered. So, and then in order to justify what has happened, so there would be frequent changes in bill of material in their ERP system. So actually, this was the beginning from where the internal audit team, when they were preparing or planning that audit, when they looked at so many changes in the bill of material, there was some kind of doubt came into their mind that why there are so many changes in bill of material. Then also, when they went deep into the whole thing, they realized that the material which was issued to the subcontractors was not coming back, or subsequent installation was not being checked properly, and thus the financial leakage was happening. Damages which were charged by the client for delayed work was not being recovered from the subcontractor. That was also the resulting in the financial leakage. And then procurement was, there were a lot of issues in procurement. And of course, when the top guy was involved, everywhere, this was a massive leakage which was happening. And, when you go and do the internal audits and you keep your ears and eye open, the previous auditor did not report any such thing, because what they did, they just went there, looked at the voucher, did some ticking, and prepared a checklist based report. And, so it was almost a clean report, except for saying that, okay, we did not check this and we did not do physical verification and all those kind of stuff. What I'm trying to convey to you is that if you are doing internal audit and you are helping a company as a outside firm, you need to be extra careful, because ultimately, when the fraud will be caught, it will be caught at some point or time. Then a question will come to you that what you were doing as internal audit. So this is a big challenge, because if your team is not trained enough to catch hold of these signals, then you need to you will be answerable for that. Now, the second case study which we found was that there was kickbacks in awarding the contractors. So when contractors were given awards, there were kickbacks, and this is not very uncommon. It is very, very common thing that somebody from the project team will be hand in gloves with the people, and the corruption will be there. That person will tell the vendors that, okay, this was the latest quote and this is the L1 which has come already, so you can quote less than that and you can win the contracts. And if you remember some of the old movies with Amitabh Bachchan and Sanjeev Kumar, and you will realize that those kind of things were already there. It was happening. So I was having an interesting discussion on this topic, with one of the senior internal auditor in one of the large corporate house. So he was saying that, these frauds or these kickbacks, they were happening in the past, they will be happening in the present, and they will keep happening in the future. But role of the internal auditor is to see whether they are able to detect and able to put a control or mitigate that risk, to some extent, and bring out that fact in their report. Another interesting case which we found was that, so there was we were doing an internal audit, and we realized that the organization was very meticulous in inviting bids, but the bids were coming from the same building. I mean, when we shortlisted, so one of the executive who was very smart, he said that, sir, look at the quotations which have come, look at the bids which have come. They are all in the similar kind of format, similar kind of language, and similar kind of address, and in the same commercial building. So they were, house number 201, building office number 201, 204, 305, all those kind of. So they were all adjoining office numbers in 5 out of the 6 shortlisted bidders. So when we reported this to the management, the top management, the promoter level, so they said, please do investigate it. And then we realized that it was all hands in gloves. So they had already decided to whom they are going to give the contract. And, that person was asked to bring in 7 or 8 or 10 bids. So that person will ask his neighbors and they will all. So it was a collusive bidding which was happening by the bidders. So when you are doing an internal audit, the challenge in front of you is that when such kind of things are happening, you cannot be just carry out your base level procedures and get away with it. You need to see, keep your ears and eyes open. That's why, in the first slide I mentioned that the role of internal auditor is ears and eyes of the management. Now, when you're looking at financial statement frauds, look at the kind of situation we are in. Financial statements, which are the balance sheet, the profit and loss account, and the cash flow statements, they are prepared in order to help users taking a decision. So whether you are, so these financial statements are prepared so that the users, whether they are tax regulators, whether they are bankers, whether they are income tax people, whether they are investors, they should be able to get answers to their question. How was the performance of the company? How is the financial position of the company? What are the assumptions which were taken by the management? How the accounting has been done? So they should be able to get an answer to their questions, and that's the whole objective because of which the financial statements are made. But look at the complexity we are living in. These financial statements are made according to the directions or the guidance which are given by their regulators. So suppose these financial statements are of a banking industry, bank or NBFC. The regulations are coming from RBI, on how to prepare the financial statements. If it is a listed company, then SEBI will be giving the guidance. If it is insurance company, then IRDA will be giving the guidance on how to prepare the financial statements. And if you are a company, then the company law will tell you how to prepare the financial statements. But in the same company law or otherwise also, you will need to follow the accounting standards. And accounting standards are not simple nowadays. You have IFRS, the companies which are subsidiaries of foreign companies or which are holding companies of foreign companies. They are reporting in IFRS. Then there are companies which are listed companies and private companies which are above a particular threshold. They need to report in Ind AS if you are a listed company. And if you are not a listed company, still you need to follow the accounting standards. If you are a company, then the accounting standards which are published in the Gazette under the rules of the company rules. If you are not a company, then the standards which are published by the Institute of Chartered Accountants, and that too, whether you are level 1, level 2, level 3, level 4. Now, please remember there are 4 levels of organization. Different level will get different assumptions and exemptions. So, and then there are, government sector related accounting standards, and then cost standards are there for manufacturing companies. And it was so complex that, income tax people said that it will become very difficult for us to make an assessment of everyone. If there is a company which is below threshold, a non-listed company, that is applying accounting standards. If it is a private company above that threshold, we'll be applying Ind AS. And then there is a listed company which is applying Ind AS. So how will we, do an assessment of these companies? So Income Tax Department brought out their own standards, which are called ICDS, Tax Income Computation and Disclosure Standards. So you see the kind of complexity which are there, and the same complexity brings in the subjectivity also. So you look at Ind AS 109, you have, huge kind of subjectivity involved in the way your expected credit loss model will be working, and it is all substance based. So, and that's one reason where the Reserve Bank of India and IRDA, they are hesitant in implementing Ind AS in insurance and banking companies. And we were having a discussion with the CFO of an insurance company. So she was mentioning that this is going to be a tough task, because each policy will have their own its own unique characteristics. And in India, because everything will be substance based, how will be the accounting will be done? Although there is a new standard which has come into play. So, but you need to, as internal auditor, you need to have a look at these areas also, in case that comes in your scope. And I will be sharing that scoping is one of the big challenge in internal audit assignments. Then there are some basic principles which if you ignore those principles, then it becomes a huge challenge in the internal audits. Confidentiality. As internal audit team, whether you're working in the corporate or you're working as a firm for the company, so whether you're helping the company in carrying out internal audit and you're giving internal audit report, confidentiality becomes very critical. And you need to train your team members. You need to explain to them that if they leak out any information about the company for which internal audit is being done, and that company's shares are listed, and there can be a huge outcome of that leakage of information. So confidentiality becomes very, very critical there. And then skill and competence. So we were, doing internal audit of a very large group. They have various different companies. I mean, FMCG is one, then skill development, then real estate, and all those kind of stuff. And then when we were pitching for a job for real estate company, they said, "Do you have architects and engineers in your team?" I said, "As of now, we don't, but maybe in future we can have." So, but I said that, "But you're trying to appoint internal auditor." He said, "Yes, but we want to have, those kind of skills in your, we would appreciate if you will have those kind of skills and competence in your team." So if internal audit, a team, if they do not have the sound knowledge of the business, then it becomes a challenge. So risk-based audit is one of the need. Gone are the days when you were doing only transaction audit. So every transaction voucher would go to internal auditor and internal auditor would sign. Nowadays, it is very important to plan your audit based on the business risks. And then you need to have your audit strategy, which is based on those risks, which have been identified, and the charter which is there. So when you are doing the internal audit, please remember to connect your audit program according to the risk and the charter of the company. The focus is certainly on system and processes, and this is the theme of these webinars also. Technology has changed the way you are doing your internal audits. So I was a few years ago, before this COVID time, we were having a physical seminar, and we were making a presentation on risk advisory. And so one person stood up. He said, "Sir, my client is having IT systems, and my client is dealing in some kind of payment gateway and all. So when I send my team to do the audit, how do I draw the comfort that they have checked everything and all?" So the issue which I want to bring out here is that you need to have technology, on your side. Your people should be able to do analysis based on the tools which are available, and only then you will be able to bring out. And if the client is not very large company, they are using tele, then you need to have those kind of tools which will bring out the data from tele after doing all those analysis. And you will immediately come to know, when you will apply those tools, that okay, those many vouchers so they were backdated vouchers, or there were vouchers which were prepared on Sundays and there were replication or there were duplication, all those kind of stuff. But I think most important part is to look at the controls and IT controls, and your processes. So ITGC becomes very critical part in your internal audit planning. And also another big challenge is that internal audit team should be involved in decision making. Whenever the business is taking a big decision, I think it is important for them to involve the internal auditor. If you are the internal auditor, please put up this point across. If you are being treated as one of the one of the low priority department in your organization. Then I tell you, we were doing audit of a large group, another large group. So the promoters, so when we had a meeting with them, they said that, okay, we want you to be very, very upfront with us. You have to tell us what is going wrong in my company. So when we said, okay, sir, we will report everything to you. Then we went and met the CEO and CFO of the company. The CEO and CFO said that fantastic, your name has been approved by the board. So we welcome you on our board. We want you to work as our team, and we want we want to have value addition from you. We want to know where things are going wrong, and we want to correct those things. Anything which you report to the board, please discuss with us. And then once the areas were defined and we went to the process units, the process owners also mentioned that, okay, we want an improvement, we want all these. Now the internal audit started. Process owners, they agreed that there are gaps, but CFO and CFO will not agree. They will say, no, you have not looked into the data, you have looked into the supply chain, but have you looked at how the demand planning was done? But if there is whatever supply chain will do will be based on the demand planning, so it's not their fault. Demand planning is not in your scope this quarter, you will go to the next quarter. Or we would recommend you have a total, view of the business. Then only you can bring up this point. This point is incorrect. So then, you say, but there is a financial leakage happened, or there is a potential loss to the company. So they said that, yeah, I agree, but you need to bring the overall picture. And there is a reason because of which we were doing this kind of stuff. Do you have any idea about the business which we are doing? So this was need of the hour, and that is how we took this call, and it was all done. So the CEO will, crack that point there and then you are left with a very little option but to go back to the data once again. So the CFO and CEO would challenge your data again and again, and you will always be burning midnight oil 2 days, 3 days before the audit committee circulation of documents. So as internal auditor, you need to be very, very sensitive to the need of all the stakeholders. If you are not sensitive, then it will blow up in the audit committee meeting. You'll go and say, sir, I found that there is this mistake. So the audit committee chairman or the promoter will look into the CEO. Is it so? CEO say, no, sir, it's not like that. I have my process owner sitting with me, head of the department. He will explain it to you. Oh, sir, this has happened because the demand planning has mentioned it like this, so we did it. But we will take corrective action, sir. But I don't agree with this point, sir. So then the audit committee chair will turn to the internal auditor and will say, come on, guys, we expected you to be all on the same page. What kind of point you have brought up here? Your team was feeling very happy that, we got a wonderful point, very big point we have captured. And this is going to, going to create a lot of value for us because they will really appreciate. But see what happened. CEO and the head of the department where you were doing the audit. So they were all, so this was an argument happened, and ultimately you were on the receiving end, despite the fact that you did a splendid job, and in your mind, that point was very, very valid point. So you need to be very careful about, you need to be sensitive about stakeholders, and you need to take all them into the same page. When you are doing your field audit, when you are doing audit discussion, when you are having closing meetings, whether you are issuing or preparing your audit reports, everybody, process owner to the head of the department, to the CFO, to the CEO, everybody should be on the same page. You need to draft your comments in such a manner that they should be able to accept. So instead of saying that this person was a thief, you can always go back and say that, there was a challenge in the system, And this thing had happened because the system did not stop it to happen. So you need to improve the system. So that means you are not raising a finger on the person, you're raising a finger on the system. So that means you need to be sensitive enough to be able to take all the people on the same page before raising your point. And your approach of internal audit, your methodology need to have that inclusiveness. You need to have their feedback. You need to involve your cross-functional people. So if you are doing MIS, or if you are doing, let's say tax compliances, you need to involve your tax team. If you are a tax expert, fantastic. But nowadays, I think time has come for people to be specialized in one field. So I assume if you are audit expert, then you will have a different tax expert, whether it is a partner or a person. You need to have those people involved in knowing whether these tax positions which were taken was appropriate, or they needed some more documentation. The promoters or the audit committee chair would always come back and tell you, this is fine, your internal audit is good, but we would like to know what is happening in the industry. Can you give us some kind of benchmarking? Can you give us some kind of comparatives, what is happening in the industry? You are an auditor and you have been going across in the industry of our kind. Please tell us where we stand in terms of market. So that benchmarking will become very, very critical for you if you really want to earn those brownie points. But I wonder where from you will get the data. So you will not be in a position, even if you are doing audit or if you are involved in some their competitors' assignment, you will not be in a position to share the data. Whatever you can share is only what is available in the public domain. So you need to be smart enough to collect those kind of benchmarking and give them answer what they are requiring. And as I had mentioned, that you need to use those audit tools and working paper. Actually speaking, this one area which becomes very low priority for internal audit is because they feel that they have done the audit and they have given the report. But ultimately, if an inquiry happens, or in case the regulator comes, you will need to show your work papers. Having your emails lying here and there in different mailboxes will not be sufficient. You need to have either a proper folder or a proper file in which you will keep your working papers. And I understand for statutory audit, your work papers are much more critical because peer reviewer will look into this, quality reviewer will look into this, NAFRA will look into this. But internal audit, only when something goes wrong, then only the regulators or the investigation agencies will look into that. But I would recommend that you please pay a little more attention to your work papers. And before doing any audit, you need to have an understanding of the processes these companies are following. So whatever data evidence which you are collecting, how you have done the audit planning, how you have done the analysis, and what kind of samples you have picked up, you need to have those evidences in your files. And when you are doing the reporting, generally the reporting is done in two parts: executive summary and detailed report. And many times the companies will give, expect the auditors to give some kind of a scorecard and give the risk rating in high, medium, and low categories. I will share some snapshots with you, and it will be wonderful if you can bring out, the root cause of your observation and the impact, whether it is operational or a financial or a compliance related. And then you can also have category classification, whether your observation is related to adding value or it is related to policy or procedures. Here are the snapshots. This particular kind of first portion on your top left is giving a compliance, bird's eye view. Everything is green, one thing is amber. That means there is some attention required. Look at this, whether the TDS or something is not good. Something happened which was an indicator, and if you would have given a red, that means the non-compliance happened, which means immediate attention is required. And then whatever categorization, your observation, what was the observation, what is the risk involved, what is your recommendation and management response. It will be great if you can put the responsibility and the date, target date, by when they will take the action and what action that will be taken. And that's where I said that everyone should be on the same page. Please try and get these management comments written by the management only, because ultimately if you will write something as management comment, tomorrow they can go back and say, no, we did not want to say like this. And then your categorization, what I had mentioned. And this is the snippet, where you will say that one observation was in red category, 1, 2, 3, 4 are in medium category, and 4 were in yellow category, which were smaller one. And you can add value by giving business flow charts. What I have seen is when we are doing internal audits, if we make these it will not take much time if you understand the process. But putting these charts into your report will add a lot of value. It is appealing to the eye, and the top management always appreciate that, okay, you've understood the process. It becomes very easy to explain that this is how your supply chain works, or this is how your demand planning works, or this is how your payroll process works, and this is how the payment process is happening. So you can always add value and demonstrate by sharing these kind of flow charts. So scoping is one of the critical challenge. I would recommend that once you are doing a scoping, go into detail, each point, whether you will be doing. So I would recommend they put those as questions, because if your scoping is not proper, tomorrow somebody can stand up and say you did not do your job well. So you need to be very careful in identifying which process you are looking at, which sub-process and which area which you are looking at, and whether it is at a head office and whether it is at a location, and whether you will be doing it on quarterly basis or every month, or whether you will be doing it on yearly basis. So the scoping of internal audit becomes key challenge, and I have seen now the people are now more connecting these internal audits with internal control over financial reporting. So your risk metrics, it is connecting the dots between the internal audit and ICOFR, and that's how your statutory auditor will be able to draw their comfort on whether internal controls over financial reportings are in order. And when they will do their own testing, they will see whether the management has done that kind of a testing or not. And I would suggest that that those kind of risk metrics can be used as your base of scoping of internal audits also. These flow charts I had already mentioned to you. They will add huge value. The institute has come out with standards on internal audit. Very, very useful. At least you have some literature to rely upon, and so this becomes your backup. So in case you want to see how the communication with the management has to be done, go to SIA 360 and ask your team member to look into these standards. Now the last slide. If you want to compress all the challenges, and if you are doing internal audits, your main challenge is data. The data which you will pick up on day one will never be the same data which you will end up working on. You will always need to go back, collect more data, and you have to be very, very sensitive about this. And I have told my team not to sweat. Always remember that the data which will be given to you at the first instance will be challenged later on by their bosses. It always will happen. So don't be too much bothered about it. Just prepare your work notes and share it with the process owner, and then go immediately to the CFO and have a discussion and go back to the data once again. So that is one of the main challenge. Process shortcoming, like I mentioned, that if there is a process shortcoming, instead of raising a finger on the person, I think if you can improve the process, that will be the a great advantage to you. But many times your audit teams will be excited when they will find something is going wrong. They will try to, point fingers at the people. Another challenge is sometimes the internal audit team will face is the pressure from the top. Arey, ye point to hata dijiye. This point we will manage in the next quarter, so please remove this point. Why do you want to unnecessarily raise this issue? So these kind of pressures from the CEO, CFO, or the process owners, and many times you will find that your even promoter group or even the audit committee would expect that these kind of points should not be coming in your internal audit report. Many times, so the internal audit department, if you are working for a company, you may have a pressure. Arey, ye wala point up. Why are you again and again bringing up these points? They are not even your scope period. Why are you getting into these all things? So there are pressures from the top which you will need to manage. You have no option but to manage these and stick to your points. Please ensure that your point gets into the report, whether it is in the detailed report or in the executive summary report, but your points need to go there. Then another challenge is, like I mentioned, that industry practices. So where from you will get the comparative, the data for all these kind of stuff. And drafting observation, you need to be really, really sensitive about people. So this is all from my side. I will stop presenting now and I'll just do a recap. Basically, what we discussed was we picked up thread from the main risk of internal audit, that fraud can get it's not, fraud is not reported. So we need to know which are the frauds, which are the red flags, what is the red, the fraud triangle an internal audit team needs to have an understanding. Then we looked at some case studies where I shared my example, how we found a massive financial leakage happening. And then we looked into some of the critical challenges of internal audit, whether it was related to confidentiality or related to technology. And then, we ended with the, standards on auditing and summarize the challenges in one slide. So I hope that was useful for you. And I'll be very happy in case, I'll be happy to answer in case you have any questions.
Thank you, sir. So they do have questions, but would you like to take them at the end of the seminar or shall I share it right now?
If you can share it right now, it will be great.
Yes, sir. Okay, so C. Rajiv Shankar, he says that opportunity and rationalization results in fraud. But apart from internal controls and training, how can we ensure that fraud is minimized or avoided?
So I think it is as internal audit department, or I'm assuming that your external firm, or so in both cases, whether you are working as employee of the company and in internal audit department, or you are a firm which is providing support to the company. So I think you need to be aware of your role, your scope. Internal auditors scoping, like I mentioned, is one of the critical most area, and you need to be really careful what you are going to do in this audit. You have to mention that okay, I am going to do these sub processes, and this is the area which I am looking into. And in those areas, if you find that there is a red flag, or there is a chance that this person might be carrying out fraud, you need to go a little deep into it. You cannot remove the frauds. There can be pressure, rationalization, and there can be justification, and opportunity also will be there. So in order to mitigate the frauds, you need to ensure, that your control processes are in place. And if you are running your own startup, and if you are having your own company where you want to prevent these kind of frauds, I think it will be good that apply these various practices which are there, best practices. So training is one of those practices, and then there are other practices also, like surprise checks and rotating out the duties. All those kind of things you can do, so that somebody else is doing that job. Like you see in the banks, every time the person is transferred to another branch and another branch and another branch. So these are different best practices for internal controls.
Yes, sir. Sir, another question is, explain how will you detect kickbacks and what controls need to be there to detect such receipt of kickbacks and prevent their occurrences in future?
So very difficult question. I think it will be very difficult to know whether the person is taking kickback or not. You have to really get it deep into the whole thing, and that's why we had that one slide, where the red flags are there. So if a person is living beyond means, you need to be really careful. If the person is going through some extreme difficulties, then again. But how do you know that the kickback has been taken? For that, you will need to get into investigation mode. And to prevent, again, I will share the same thing which I shared in the previous question, that you need to have different methods or different kind of internal controls so that the kickbacks are not done. So best way is to keep on rotating the duties, and then methodologies or the controls which are there, the risk control metrics would be there. So that would mitigate those controls, those risk of kickbacks.
Right. And so there are a lot of people who want the copy of a presentation.
It will be an IPR issue, but I'll see. I'll share some slides with you. Yeah, I'll circulate.
So that's all the questions. Thank you so much, sir. This was indeed a very great session. Moving on to the session 2, the area of discussion for session 2 is embedding technology in internal audit, which will be covered by our esteemed speaker, CA Bharat Garg. CA Bharat Garg is a CA and CS with around 2 decades of experience in internal audits, process and compliance reviews, investigations, operational risk management, and revenue assurance. He is also a certified internal auditor. He is currently working as head of audit, Fidelity International India. He publishes a monthly digital magazine, Internal Audit Today, on behalf of IIA India as chairman publications committee. Previously, he has also supported the ICI Committee for Standards on Internal Audit. It gives me immense pleasure to call you on the virtual dais, sir.
Thanks, Rupalji. I hope I am audible.
Yes, sir. Yes.
Okay. Good evening, everyone, and I hope everyone is keeping safe and fine. I would also like to thank Jalandhar branch of ICI, our chairperson Sonia ji, Internal Audit Standards Board of ICI, the organizers Arun ji, Aarti ji, and Nanda sir for giving me this excellent opportunity to share my perspectives and my experience with all of you. Let me bring up my slide. Is it visible?
Yes,
Okay.
sir.
Thank you. So I'll be covering the topic embedding technology in internal audit in 3 broad aspects. So brief background, and second will be we'll be talking about the new age technologies and some use cases, and finally, how we have been using technology in internal audit. Now this is a very simple, but as you can see, very powerful and self-explanatory image. This basically showcases, how much have technology shaped our lives, and more importantly, in last couple of decades. And just think of your daily routine, the kind of gadgets which we use from morning till evening, and we will understand how technology has entered into every sphere of life, our personal lives, and of course, our work life as well. Now, just couple of decades back, if we think, technology was just an enabler. It was helping businesses drive scalability, improve their productivity, efficiency, reducing cost. But over a period of time, as you would have seen, the technology has taken a center stage. Now technology is at the forefront and it's driving all the businesses. As we could see, a host of new age startups, which are pure play tech service providers, they have come up and they are challenging the established organizations, something like Oyo, something like Uber, as you would have seen, or there are a host of other organizations or other startups which have changed the way we operate and change the way we live and change our preferences. Say, for example, Grofers, Amazon, Flipkart, Zomato, and even Facebook. So they have been changing our lives in last couple of decades. I work for Fidelity International, as mentioned earlier, and it's an asset management firm, something like HDFC, AMC, or Nippon or UTI. And from this industry, I would like to talk about, one example like Zerodha, which all of you would have heard, or the Robin Hood of America. Now, these are the broking services, deep discount broking services. They have been challenging the way the established broking services like ICICI Securities or HDFC Securities have been operating by giving deep discounts onto their broking service. And they are pure technology players. No, there may be physical offices, but very minuscule basis. Most of the transactions are FTP transactions. The user interface is fantastic, and they don't charge you anything. And just a short span of time, Zerodha has garnered around 15% of the total trading volumes on National Stock Exchange. And as I said, they do not charge anything, but that's how the technology plays. Of course, they will have some other revenue models to monetize. And as it is said that when the product is free, then you are the product. Of course, your data, your preferences, those will be monetized in another way. Now, what it basically tells us is that technology is emanating, and technology at the same time is impacting business, and at the same time is impacting the risks. This is a snapshot of the industrial revolutions which we have seen in last 3 or 4 centuries. As you would see, right now we are in the 4th industrial revolution. The first industrial revolution, it started with mechanical production, whereby the focus was more on mechanical power and the steam. The second industrial revolution, it was more about electrical power, advent of assembly line. Then few decades back, we moved into the third industrial revolution, which was automated production, electronics, semiconductor chips, computers. And currently in last couple of decades, we have been witnessing the 4th industrial revolution. It's more about the new wave technologies, which we'll be spending more time in a few minutes. Why I want to bring this up is that, as you'll notice, change is a constant in the universe. We are always under tremendous change, but what has changed over a period of time is the speed of change. As you will notice, the first and second industrial revolution, it lasted for more than 100 years. But over a period of time, the pace of change has increased considerably. If we look at the risk management or risk registers of any organization, all will be managing the change as a risk. They will be thinking about, the risk to the projects, product obsolescence, resiliency, all of those kind of stuff. But of late, what is more important is the pace of change. The products and technologies are getting obsolete much faster. And one simple reason, which I could think of is that the cost of innovation has gone down. Previously, learning was restricted. There was limited resources, but now everything is available for free on Google. You just need a data connection and all information is available. Now, the banking services, the banking and financial services is one of the main adopters of any new technology which comes into picture. Say, for example, if you think about it, when was the last time that any of us has visited a physical bank branch? Probably it would have been years. Now, even for account opening, wherein KYC is a standard requirement, everything is done FTP, everything is online. You can do it at the click of a button with mobile banking, internet banking, and a host of other features which are available at a tip. It's pretty easy that you don't need to visit a bank. So that has changed the entire way a bank operates, and of course it will have a significant impact on the risk within which the banking industry operates. I spent majority of my time in the banking industry and in the telecom industry, and I consider these are the two industries which basically adopt technologies and, more importantly, have a very wider impact because it touches the masses. Everyone would have a mobile phone, at least in these days. Everyone would have a bank account or would be using some sort of financial services. Now, If I think of telecom also, it started in mid 90s, when we had pagers, which was largely, text-based. Over a period of time, the telecom industry shifted to mobile phones. It was largely driven by voice. And in early 2000s, we would have seen, it was a mix of voice and text-based messages, largely the messages and some of the data value-added services. But in last one decade or so, it's the it's basically the data, and now these days content is the king. Data is largely available free in India, thanks to various companies which have rolled their packs. But again, the thing is, look at the journey and how fast the journey has been. In just 25 years, it has seen multiple changes. Now, I'm a chartered accountant, and most of us, we come from non-tech backgrounds. We may not be as much tech savvy. Of course, we need to upskill, and that's the call of the day. But many times we may find that these new age technologies, they may be mind-boggling. It may be difficult, to understand how it impacts the environment. But one thing, which always keeps me going, and which is the most fundamental thing, is the definition of internal audit. The basic fundamentals of internal audit, or its remit, it remains the same. So the definition of internal audit as per Institute of Chartered Accountants, it provides our objective, that is independent assurance on the effectiveness of internal controls, the risk management processes, and the objective is to enhance governance and achieve organizational objectives. This remains the same irrespective of the fact whatever technology comes into picture. The basic principles of internal audit: the internal auditor need to be independent. It need to be, there should be no impairment to its objectivity. The auditor should exercise due professional care. It should, maintain confidentiality of the client data, as was mentioned by Praveenji. Risk-based auditing, so that you focus on your resources onto the most riskiest audit objects or areas, and a continuous improvement. These remains the same. Same goes for the skills. Of course, with the new technology emerging, there is a requirement that one needs to learn, unlearn, and relearn. It's very important that we keep on upskilling ourselves to be in tandem with the emerging technologies, the risk emanating out of it. However, the basic internal audit skills, the interpersonal skills, how we interact with our stakeholders, how we interact with our auditees, the analytical thinking, analysis of the information which we collate over during the course of internal audit, an inquisitive mind, a professional skepticism, how we analyze the information, a problem-solving attitude, all of this remains the same. And another important point is that, be it a manual transaction or be it a FTP or transaction enabled via technology, the info triad remains the same. The CIA, that is confidentiality, availability, and integrity of the information, it remains the same. And that's the whole objective of internal audit, is to assure that effectiveness of internal controls and risk management processes, they are maintained. I give you a couple of examples which has really helped me, in coming up with technology. Now, all of us will be receiving a lot of unsolicited messages from various companies or financial companies or other various offers. And just try to draw a crude analogy to the data leakage prevention systems which we have in our organizations for data privacy and information security. So despite getting a lot of messages, and despite having a do not disturb facility which is registered, so I simply applied a filter. And that filter basically, had some keywords like hurry up, sale, offer, or something like that, which basically filtered out most of these unsolicited messages which were coming. And this really helped me a lot. None of those were deleted, but they were put in a separate folder, which I can analyze over a period of time. As I said, draw this analogy to the DLP systems, whereby there is a risk of information security or data privacy, whereby any employee may be sending emails outside the organization network, or there may be third-party apps which may be providing in-app messaging facility, or there may be simple browse and upload. You open a website and upload something from your organization network, and then DLP systems comes into picture. So initially, it was a bit of a problem, but when I started auditing any of the DLP systems, but later on I realized it's a simple filtering mechanism. It has been configured in line with your organization privacy and infosec policies. Then another example is that because of the technology which we have seen is the number of tech auditors in my global internal audit team, which has increased rapidly over a period of time. So when I started 6-7 years back in Fidelity, there were less than 10% of the tech auditors. But over a period of time, the number of tech auditors have increased immensely. And even today, we still scramble for the scarce IT resources. Now, what does that mean is that each and every audit which we perform, it requires support from the IT auditors. So what we have done over a period of time is we have embarked on a very ambitious program, and we upskilled all our business auditors. So who come from the non-audit background, we trained them, and it's a very comprehensive training program which we provided to all of them, and that will encompass the basic application controls, interface testing, the basic ITGC with respect to identity access management, or DRP systems, or change management, and those kind of stuff. Initially, we provided some buddy support to each and every auditor, and but over a period of time, they will be working independently. The whole idea is that since technology is encompassing all our entire organization, all the business functions, so it's very, very imperative that we audit the technology running behind those processes. And hence, we need to upskill and we need to deploy more IT resources within every audit. So now those business auditors, or maybe few months down the line, those business auditors will be able to do all the basic stuff. And the tech auditors, again, it will be a win-win situation for them. They will be focused more on the new age technologies. They can move up the ladder and they can focus on cloud, they can focus on blockchain, they can focus on RPA and those kind of stuff. This is a very brief snapshot of the various new age and emerging technologies which we hear quite regularly, and some of the business applications. They are not listed in any particular order. It's just that the first 2 or 3 we get to hear quite often, and there have been multiple use cases in our day-to-day lives or in our organizations. The first one is cloud computing. There's a lot of noise around cloud computing for in last 5-6 years, and there are multiple examples wherein it's being offered as software as a service, like Microsoft Office 365, which is offered over the cloud, or platform as a service, wherein you have IBM Cloud, or infrastructure as a service, say for example Microsoft Azure or Amazon Web Services. A simple example which we use on our day-to-day lives is the Google Cloud or Google Drive, which we use to share our own personal documents or mostly for photos. Then another use is virtual desktops. This is one of the most important thing emanating, basically eliminating one of the key risks. So with our desktops or the data moving onto the cloud computing, it's very simple to access your data, your desktop from remotely, from anywhere, from any device, post requisite authentications. And one key thing which I have seen, because of this cloud computing, as the moment your data starts moving to cloud, or there is no physical server which is hosted into your own organization, then the BCP risk when it comes to the server is down or the network is down, that is basically mitigated to a large extent, because now it's not about the server which is hosted in your organization, but it's quite widespread. Your employees just need a working internet connection from your home. They may be sitting in any of the cities and they may be able to access the cloud. So there is no dependency that if the organization network goes down, what will happen to the BAU working. Second is big data analytics. Now in 2012, the Harvard Business Review, one of the most prestigious magazines, it mentioned data scientist as one of the sexiest job of 21st century. And definitely there was a reason behind it. We have seen a boom in the kind of data which is being generated by various organizations and how it is being put to use. There are many instances, the way that organizations collects the data, the organizations manipulates the data and draw insights out of it. Of course, the data is quite huge, and many times, it may be seen as to, what to be done with that data. I give you an example from customer analytics. Now, you all know that it's pretty simple or easier and cost effective to retain a customer rather than onboarding a new customer. So within our organization, we serve millions of customers and we serve their we manage their assets. So what we realized that over a period of time, the attrition rate of customers leaving our platform is quite high. We analyzed a host of parameters, around 70-80 of them: their age, their profile, their investment pattern, their spending pattern. We superimposed it with the how the markets are behaving, the micro economics of that particular country or geography, or the world level politics and economics, what's going on. And we were able to identify with a reasonable amount of certainty as to this is the set of customers which will be leaving our system in a short span of time. Now, how that helped us is, in case of like next best conversation, so we'll comment into AI and machine learning, but at least we were able to identify as these are the customers, and then of course, I may have some retention strategies applicable for them. Then big data analytics, it also helps us in mitigating or minimizing mitigating and minimizing frauds and improving the operational efficiencies. They may also happen various functional analysis, trends, patterns. So say, for example, if there is a transaction or a shop processing thousands of transactions, so what's the trend? There may be certain aspects that the percentage of error may go up towards the month end when the volumes are quite high, or maybe towards the holiday season, or in case of financial services towards the tax year end. So all of those information is stored into data. You can analyze that data and draw insights out of it. Next is robotics process automation, RPA, or the bots as we call it in normal parlance. Now, BFSI sector deployed bots since very long. In fact, in our organization, we deployed the first bot 8-9 years back in 2012. Initially, of course, it was for repetitive and very mundane tasks. It may be very simple as inputting data from one system, inputting data, or copying pasting data from one system to another. Basic validations or basic comparisons wherein the two systems are fragmented or there is no common interface between the thing, or it may be a reconciliations as well. One example of RPA is which helped us eliminate a lot of paper trail or basically a lot of human effort is in the data punching. Imagine a scenario a few years back when a customer walks into a branch, they gives us a paper instruction, be it of anything, be it of a new account opening or any account maintenance activity, change of address or something. Then one staff populates it into the system, another validates it, and then the transaction is executed. But with the help of bots and mixing it with a couple of other technologies like optical character recognition, it has been made pretty simple. Now all such physical forms, they are scanned, and with the help of optical character recognition, the data filled in by the customer is digitized, and that's a sort of first level populating. The second person, so there is no first person which is involved. Directly the second person, he validates it. If the data which has been digitized by the system or OCR technology, it looks good, it matches with the physical form submitted by the client, and if it looks fine, it simply presses submit, and then a bot, it takes it and populates it into all the systems wherever it is required, and the transaction is executed. And in case the second person, or basically the first person actually after OCR, he feels that, let's say, 20% of the data which is captured, or 20% of the data fields, they are not captured appropriately by the OCR technology because of language issues or illegible language or whatever. So it may amend it, and only those ones which are amended by that person or reviewer, it will go to the third level reviewer, so that there is no segregation of duty, or there is no manipulation of data. So it has saved us a lot of man hours, and of course it has saved us a lot of costs. Blockchain. So again, this is something which we have been hearing for quite long, and very recently, as and when the key blockchain, or the key cryptocurrency, the Bitcoin, it makes new highs. As of now, there are 2,500 cryptocurrencies available in the market, and there are large number of organizations, something like Tesla, which are promoting a lot of cryptocurrencies like Dogecoin and Bitcoin. So that's one thing. Of course, there are certain concerns by the regulators and the financial services regulators across the globe, because there may be some inherent risk with respect to movement of or the how these blockchain or cryptocurrencies operate. There won't be any regulation over these payments, there won't be any regulation over the movement, and they may be a threat to anti-money laundering, checks and balances, screenings, and terrorist financing. Having said that, the blockchain in itself is a technology, though cryptocurrencies are leveraging on the same, but trade finance or even interbank settlements, they may be one of the biggest beneficiary of blockchain. This will help drive a lot of efficiencies into the system. The entire process or the chain of events, it will be transparent. It will be available at the click of a button. It will be visible to all the parties. And in the long run, it will definitely lower costs. Next is artificial intelligence and machine learning. Many times these are being used interchangeably, but artificial intelligence is basically a human, whereby we enhance the intelligence, or we make the machines think like humans. In case of machine learning, whereby machine learns, or it's a sort of continuous improvement, whereby machine learns on the basis of past mistakes, past data, and you make it learn on the basis of how transactions or how processes have been executed in the past. Say, for example, like some of the good examples could be chatbots. So if you order something from Zomato, or if you order something from Amazon or Grofers, and we would like to have a conversation, have some queries with respect to it, more often than not, you will find that you will be interacting with a chatbot. Only if the problem is quite specific or there is a specific nuance, it will take to you a human customer service personnel. Next best conversation, moving up from the example which I gave, whereby we analyzed our customers who are going to leave our system. Now, if I know beforehand that this is the set of customers which are thinking of moving out of my system, so imagine a scenario that they call up next time the customer service, or they initiate a contact, so we know what to talk to them, and that will of course help drive down the attrition, or the people moving our systems. Robo advisors, algorithmic trading. So as of now, fund managers or private wealth company, they spend a lot of money onto the investment management firms. But with the help of artificial intelligence and machine learning, which deploy a sort of algorithmic trading. All of these companies are getting more and more efficient. So going forward, or maybe few years down the line, there will be lesser needs for investment management companies. Then you have robo advisors. As of now, the funds or the equities or the fixed income bonds, they are actively managed. But then there are robo advisors available in the market, again pure play tech funds, which basically manage your funds on the basis of artificial intelligence, and they evolve over a period of time. And the kind of charges which they charge is very, very less. So if a typical asset management firm would charge 150 bips for managing your investments, a robo advisor may do it for free, not even for 10, 15, or sometimes for 10, 15 bips. And our organization also, 1.5 years back, we launched a fund, and it was completely free. So that means we are saying, you come, you join us, you have your investments with us, we will manage it, we will serve all your requirements, we will be able to help you with all your queries, we will send all the requisite letters, you will be able to access our platform, and we won't charge you anything. Of course, we had we would be leveraging onto the data for upskilling, or we would be using the data for cross-selling other products. Next is Internet of Things. Again, it was said that there will be a flurry of connected devices. I'm yet to see that. It's happening around us. One classic example is, you could see that connected vehicles and or asset, energy or traffic management deployment, whereby Internet of Things is evolving. Or a very simple, from our day-to-day lives, we could see a smart bulb covering, which is having a sensor and which can be operated remotely. And or another example which I would like to quote is black box insurance. So as of now, the it's a car or it's a vehicle which is insured, but over a period of time, and in many developed countries, it will be the policy holder which will be insured. And the black box insurance is basically, it will be a connected car, and this technology will be tracking how you drive, how much you drive, how have been your driving habits, whether it's safe or whether it's rash, and on that basis the premium will be calculated. And towards the end, I have listed a few other technologies like drones, robotics. These are being used in some specific industries, maybe in manufacturing shop floor. AR, VR is being used increasingly in the gaming and the tourism industry. Now, leveraging technology in internal audit. So if I talk about key benefits, in the BFSI sector, we have 3 lines of defense, and it has been there for last 10-12 years. Over a period of time, it has percolated to the lowest level. The second line makes the various risk tools. The first line is responsible for deployment, and finally the internal audit, which is the third line, is responsible for providing an independent assurance. It's very important that all of these 3 lines, since they have a common goal, maybe their method may be different, but they have a common goal. They speak same language. It should be one organization, one risk, and technology joins them together. There are many systems available in the market which enables this. You can have an enterprise-wide risk management system which will help you provide an integrated approach, and within one organization you will have one risk and one voice. Second is value enhancement. Of course, this is very, very straightforward. So if the organization has embedded a lot of technologies, or the organization model is evolving, so it's very important that stakeholders will be having similar kind of expectations from the internal audit. And it's important for the chief internal auditor to, or the department, to move up the ladder and embrace technology. Of course, cost efficient. Initially, it may seem to be quite costly because it will require a lot of investment. It will require a lot of upskilling and training resources, hiring, technical resources, which may be costly. But in the long run, it will be cost efficient and it will drive more value. Focus on key risks. This is again quite straightforward. the resources in any organization, they remain scarce, and there is no fun in having a periodic auditing. It's very important that organization resources are channelized onto the key risks. And some of the technologies which we'll be discussing in few minutes, it will be helping us focus onto those key risks. And automation of repetitive admin mundane tasks, something which we have seen previously by deployment of bots, or in case of internal audit, it could be like follow-up for the audit issues, timely reminders to your stakeholders, and those kind of stuff. In terms of technologies which we use, I have divided into 5 broad technologies. Audit management tools. Most of us would be using one or the other kind of audit management tools, and they help us in the entire life cycle of the internal audit, starting with maintenance of the audit universe. Then it will support us in the annual risk assessment or periodic risk assessment, as the case may be. It supports us in the individual audit planning, helps us in maintenance of electronic work papers. There is a proper workflow management, whether it's peer reviewed. It also facilitates various QAs, and it also generates automated audit reports. At least I would say the first cut or the second cut could be generated by the system. Of course, audit report requires a lot of reiteration. It requires a human touch, and sometimes the perspective of stakeholders need to be embedded into it. So it need to be enriched with that, but it can help you with some basic skeleton. Then these management tools can also be configured in line with your organization internal audit methodologies, and it can run a lot of sanity checks to help you understand if there are any specific exceptions to the methodology. Then it may send reminders to your stakeholders as and when any action date is coming up, or in case it's overdue. It may also help in coming up with some standard reports. Audit scheduling and time management. Again, quite important. The resources are scarce, and we may end up spending a lot of time onto non-BAU activities, stakeholder management, upskilling, training, HR, admin related aspects. So this can really help that the entire resources, they are scheduled appropriately so that they can achieve the audit plan, annual or the periodic audit plan. The remaining 4, there are 4 separate slides. Data analytics. If we talk about embedding technology in internal audit and how technology have reshaped the way internal audit is being done, data analytics is something which I'll call the single most important factor. And I'm sure all of you will agree with it. The organizations are changing, they are generating huge chunks of data, and it's very important that all of that data is analyzed appropriately to draw insights and provide value to the business. And it's not that data analytics will help us in the audit fieldwork stage. In fact, it is imperative that we embed it across the internal audit life cycle, starting with the high-level risk assessment. So if you have an audit universe and there are multiple audit objects, so like in our organization, we operate in more than 25 countries. We have more than 6 or 7 different kind of products, depending on the individuals, depending on the modes of sales, depending on the channels. So it's very imperative that we analyze all of that in a very holistic manner. Definitely, it will not be feasible to audit all of those audit objects on a periodic basis. It will require enormous resources. So those need to be risk assessed, and herein the data helps us. There may be multiple data sources. You may have errors which may be logged onto your, which may be logged by first line. It may be logged by second line. It may be, coming up from the stat auditor or, the regulatory auditors. The various kinds of breaches, the compliance breaches which are being recorded, the various technology incidents which pertain to different technologies or the different systems, various open issues pertaining to a particular audit object, the risk event, be it because of people issue, be it because of process issues or technology issues, the management information which is being generated. Then there are other aspects like information from HR. So like in current environment, because all the organizations are rushing towards digitization, there is a scramble rush for tech resources. So if attrition is high in a particular area, so it may be a red flag. It may be something that you may need to look into. So all of these data sources can be combined. It can be enriched with some other subjective aspects, like if there is a big ticket organizational change, or if there is any shuffling, or if there is any key man dependency, or any other kind of new regulatory requirements or new industry best practices which are evolving. It can be enriched, and then you can risk assess all of your audit objects. That will help us understand which are the riskiest areas in your business, or which products are more risky. Another example could be that you could combine it with the product specific MI. So if there is a particular product uh, which is growing pretty fast, or there is another product which is losing money, so there are very high chances that the controls within those particular areas may be strained. So all of those factors can be reviewed holistically with the help of data analytics, and help you understand what are your risky areas, and come up with a very true risk-based audit plan. In the planning and testing side, so when you think of an individual audit, of course, it's very helpful. Gone are the days when we need to test 25, 30 or 50 samples. When transactions are running into thousands and thousands, it may not be appropriate even if we check 50 or 25 or 50 or even 100 samples. It's imperative that we give assurance over the entire population, and the only way is big data or the analytics. We deploy various data analytics tricks and or the tools, and we provide assurance over the entire population. Underneath it, I've also mentioned about risk-based sampling. Now, on one hand, I'm talking about assurance over entire population, and another side I'm talking about risk-based sampling. So this will help us here in data analytics will help us in identifying risk-based sampling. So say for example, despite the fact that organizations are adopting digitization, but still a large number of transactions may be manual in nature. So wherever your audit object, or wherever the scope of the audit, and it has got a lot of manual entries or transactions, so therein the data analytics can help you in identifying risk-based sampling. So it may still be representative of the total population, but you will apply some logic to identify, if there may be higher chances of controls going haywire. And in terms of reporting, of course, objectivity and quantification. So if you would have deployed data during the course of audit fieldwork, so you will be able to quantify your observations or your opinion in the audit report with the data. And of course, any opinion which will be backed by data, it will be it will be a great value add for the stakeholders. It will be more respected, and it will be more considered. On the top right, I have mentioned about advisory, but I think frankly speaking, it depends on the maturity level of organizations. Even in our organization, the data analytics journey, it was patchy, but in last couple of years, we have made some good progress. And when I talk about these advisory aspects, so these are still few years away. We have been experimenting, but yet to see some meaningful use cases. Continuous monitoring. In the last slide, we spoke about risk-based planning so that we identify what are the riskiest areas. But despite that, there may be certain audit objects, or there may be certain processes, or there may be certain areas which are very dynamic in nature. Say, for example, information security, or data privacy, or regulatory compliances. It may not make sense that we audit them once in 2, 3, or 4 years on a risk-based auditing program, but it's very imperative that we have a continuous monitoring or auditing mechanism for such kind of areas. So it may be a mix of having an MI, having combining the data analytics, but it will provide you with an exception reporting. Say for example, if we talk about funds, there may be different kinds of funds. It may be equity funds, it may be fixed income funds. Then the funds may be pertaining to different categories. It may be large cap, small cap, mid cap. Then there may be some thematic funds. There may be some industry specific funds. It may be for BFSI, it may be for pharma, it may be for tech, all of those. Then there is a concept of ESG also. There may be sustainable funds. Now, each of the fund, it has got an object, and those objects are to be met. Those objects are basically the driving factor basis which the investors, be it retail or institutional investors, would have invested into it. So it's make very, very important that the fund at all points in time, or the investment management team at all points in time, it focuses and it remains within the ambit of those objectives. So if we have said that it's a pharma based large cap fund, then, and we have set 70% threshold, or that means 70% of the fund AUM will be invested in pharma and in the pharma large cap units itself. So that is something which is an objective of the fund, and it needs to be adhered at all points in time. So this is something which we cannot leave for 2 or 3 years, and there has to be a continuous monitoring over this aspect. So there are tools which have been deployed, of course, with the help of technology, which basically scans each and every investment which has been made, and it scans it with the matches, it compares it, reconciles it with the objective of the fund, and throws an exception reporting. Many times these may be embedded into the smart systems which are coming up, and many times, in case the systems remain fragmented, you may have standalone exception reporting or continuous monitoring built upon these systems. And as I said, this needs to be done by a mix of various technologies: data analytics, RPAs, and bots. Tools in IT audits. So in last few years, of course, there has been a lot of development, but if you look back 8-10 years back, most of the tech audits, that would mean application audits, it would mean the basic ITGC, that will cover your identity access management, it may cover your DRP, it may cover your change management. And but as of now, the technology is getting complex and complex with with multiple new technologies coming into picture. So there are a whole host of automatic GRC tools which are available in the market, and which can help you automate these ITGC aspects. Though they may take care of your entire IAM universe, it may take care of the various entitlements, it may take care of segregation of duties, toxic combinations, the controls over privileged users. It may take care of any exception to the break glass controls. So all of those things can be done at the click of a button. The only limitation in this aspect would be that not all the system would be compliant with these new age technologies or new age systems. So if you have a legacy system, that may not be compliant, and that may not be able to provide you such kind of assurance. The second is application and code evaluation tools. So for long, and in fact in many organizations, the code or the driving factor or the technology code or the black box, it's being considered as it is. So we do not audit the code, we consider it as sacrosanct, and we only audit around the technology or around the code. So if a particular technology or an application or any change which have gone into it has been embedded into the system, and we only test whether management has given approval over it. We may test segregation of duties, like between developer and the tester and the production environment. We may test if the UAT have been signed off appropriately or not. However, in the BFSI sector, I am seeing in certain developed economies, the regulators are tilting towards evaluating these codes itself. So they would expect internal auditors to go beyond it. They would expect internal auditors to provide an assurance over the code itself. Now it's an Herculean task. It requires a lot of upskilling. It requires, full stack developers. It requires people with intense technical knowledge, to be a part of the internal audit team. But definitely over a period of time, this would be very helpful. So if the management is deploying any new application or making any changes, they may be having some use cases. They may be creating some test scenarios. They may be evaluating those test scenarios, and but no amount of planning could help them understand what the actual situation may unfold. And how do we get assurance that the testing has been done appropriately? Because we are only reviewing it from a SOX point of view, something like if UAT has been signed off or not. Have we really tested if all of those test cases are sufficient to evaluate the critical path of code? So again, there are various tools like Vanguard Administrator or SRC, which is coming into picture and which can help you, evaluate these codes. These are some of the performance support tools. Audio, video conferencing, very simple. We are using it right now. Screen capture, steps recorder, Snagit, Greenshot. So many times it so happens that, and more particularly in current environment, when we are working from home and when we are auditing or interacting with our stakeholders from home, and we are using screen share for walkthroughs, that our focus is more on taking minutes, or our focus is more on taking screenshots. But with these tools, we have found, the life has been pretty much easier. So there is one particular tool which I like Step Recorder. So you just switch it on, of course, with the due permission of the stakeholder or within the ambit of your organization security policies, and just forget about all the screenshot which you need to take. So every time you just focus onto the conversation with the stakeholder, and every time you need a screenshot, you just press enter. You don't have to, do a snipping, or don't have to do a Snagit, something like that. It will record each and everything, basically a video recording of your conversation. And towards the end, or while you are documenting, you can extract the requisite screenshots, whatever are required for your documentation. Collaboration, Teams whiteboard. Again, these have been very helpful. In fact, within our organization, we deployed it around 3 years back. And Teams, not only for the purpose of audio video conferencing, but more importantly as a collaboration tool. So as we all know that any audit report, irrespective of the fact if you use a audit tool, it goes through multiple reiterations, or there may be version control issues, or even in case of documentation, there may be various comments. But with these collaboration tools, so all of that is history. It reduces email traffic, multiple people can work simultaneously, and it manages version control. Sentiment analysis, opinion mining, as some people call it. So that is something which we implemented a couple of quarters back. So this is an in-house developed tool. Now imagine a scenario that we operate in 25 countries. We audit across the processes, and the audit conclusions, they are being written by different people across the world. Though all the audit reports, they go through a formal process, so they are reviewed by the global head of audit. They go through the QA. But still, when we talk about the audit conclusion, the front page which goes to the CEO or the senior management or to the audit committee, it may still have a human touch. It may still be different from person to person. The same observation may be written in a different manner. There may be cultural influences as well. And since we operate in so many countries, the team is very widespread. It operates out of 9 locations. So we were finding it extremely challenging that there may be scenarios that 2 reports, and sometimes even on the same subject, as simple as let's say HR in APAC or HR in UK, having similar kind of observations, they may have a different message. So we got a very, very simple tool. It uses natural language processing as the underlying technology. And what we simply need to do is we simply need to cut paste our executive summary into that tool. It analyzes it using the NLP technology. It understands the tone of it. We have configured few words or the choice of words which we use quite frequently in our audit reports. And on the basis of a scoring mechanism, it can tell us that whether the rating which we have assigned to this particular report is in line with our previous reports or not. And of course, we keep on improvising it. And just in last couple of quarters, we have seen tremendous changes. So there are instances when, assuming the report rating is high, medium, low, hypothetically. So we have seen that if it is a medium rated report, but the tool may tell us that the language is too harsh. So we need to tone it down. And of course, we have done that. Any questions? So maybe I can take it now, or Rupalji, as you'll wish, maybe towards the end of the third session.
Yes, sir. So we'll do it after the session.
Okay, thank you.
Thank you so much, sir, for such an informative session. Moving on to the next session, the topic for which is how internal audit can fast forward to the future. This will be covered by a proficient speaker, CA Jayant Chatterjee. He is a chartered accountant with 24 years of post-qualification experience and head of finance of listed Metro Group of companies in Malaysia. He has worked extensively in India, Malaysia, Singapore, and won many awards in finance, including the Best Manufacturing CFO Award. He's also been featured in the top 50 finance leaders. He's an alumni from IIM Ahmedabad, Henley Business School, Institute of Directors, India, and Cost Accountant. It is a matter of great honor to call upon CA Jayant Chatterjee to proceed with the session.
Yeah. Good evening, everyone. It's been a privilege to be here. Thank you, CS Nandaji. I would also like to thank Aarti, Rupal Jindal, and all the dignitaries, the dignified speakers who had spoke before me. So the topic today is a very important topic, and I would like to take you through the internal audit functions as how it would transform itself in the fast forward. Can you see it?
Yes, sir.
Yeah. So when we talk of fast forward to the future, as spoke by the previous speakers, we have seen the challenges of internal audit. We have also seen how internal audit is there transforming itself. Like Mr. Garg has explained, what are the features. So what I would focus more on the technology and how technology is transforming internal audit, the internal controls, and as a chartered accountant or an internal auditor, what aspects an internal auditor need to keep in mind before auditing and post auditing those transactions. So we have seen a lot of disruptions in a couple of years of COVID. So many companies like to put the internal controls in terms of safeguarding of assets, preventing frauds, verify financial records, organizational performance, efficiency management. Now, these digital technologies are transforming traditional industries and business models as they have done already. So we are in the midst of a transformation phase. Now, how does it impact on the control procedures, risk management, and audit technology? Let us see a small video.
Intelligent automation is dramatically changing the way work is done across all functions and can do the same for internal audit. Automating internal audit and SOX activities can lower costs, increase assurance, enhance quality, and create capacity. It also enables internal auditors like this one be more effective and strategic. Automation is well suited for high-volume transaction processes. It allows for larger audit sample sizes and the ability to test full populations within minutes, and with an increased testing frequency to provide greater assurance with a higher degree of consistency and quality. Internal audit and SOX departments are saving thousands of hours by automating repetitive, time-consuming activities. Automation creates capacity so audit teams have more time to work together analyzing complex issues and their root causes. Challenges in automation arise when there are variables and procedures and testing attributes. Selecting the right case is paramount to making a positive impact. We created an approach that aims to use standardized processes and quickly identify and assess automation opportunities. Based on the assessment, analysts determine the requirements and they either build or repurpose a solution for automation. We leverage a suite of technologies and use the ones that are best suited for the procedure to be automated. One example is an automated general ledger reconciliation review. The bot is designed to validate that the account reconciliation is approved, validate that the balance ties to the general ledger, identify unexplained and reconciling items, and determine that no reconciling items are older than 90 days. The bot interprets input data from the reconciliation engine, reading the XLS formatted reconciliation report. The bot is capable of interpreting multiple reconciliation reports simultaneously. The bot ties general ledger data within the XLS input file. The red text describes potential exceptions and contains notes for the human auditor. The bot then documents and uploads the PDF work paper as the output. This general ledger bot can save as much as 50 to 75% of the time to complete the test manually and produce reliable work papers while also testing larger sample sizes. And humans only have to follow up on the findings from the bot's work. Leveraging automation can save hundreds, if not thousands, of hours. The result can be audit and SOX departments that are more valuable to their companies and better engaged with business owners. These departments also provide increased assurance and create greater job satisfaction among team members. Supplementing internal audit and SOX with process automation is making a real impact. Adding machine learning and natural language processing will further enhance the capabilities and make us even more efficient and effective.
So we have seen how intelligent automation facilitates internal audit in terms of where there is high volume transactions, large sample size, it lowers cost, it helps in saving thousands of hours in the processing work, it automates, helps in general ledger reconciliation. Sometimes more than 90 days, we have cutoffs for maintaining through bots. Then bots are internet. When we say bots, we use internal bots. So there's a computer program that operates as an agent for a user or other programs. Like we have Siri or Cortana as bots. So this helps in 50 to 75% systems speed or efficiency, and it saves hundreds and 1,000 of hours. This is very important. Now going to the next slide. These concepts, I think everybody mostly knows, or maybe partly we are aware. So majorly we are talking of cognitive intelligence, artificial intelligence. So in a nutshell, what we are talking is machine learning capabilities and machine learning power. We are talking of visual perception, speech recognition, decision making, natural language processing, and natural language generation. Now, what is advanced analytics? We have heard of data analytics from the previous speaker, as well as we have seen in the last 5 to 10 years, a lot of big data analysis in India and rest part of Asia. So now companies focus more on predictive tools. When we make a budget, earlier our concept was more on previous year and compared to previous year, last 2 years, and actuals for the last year. But now when we talk of any business decision, we talk of predictive models. What it would be had I taken these assumptions? What kind of EBITDA I'll generate had I made these assumptions? So the management or the senior managing director of the company is more focused on what would be this year and next 5 years, rather than historical data, which will give only some data where we cannot make any changes at this point of time. So we have text mining, analytics, continuous auditing techniques like we have seen, and visualization tools to help further on this. So the next one is robotic automation. When we say robotic automation, everybody knows what is RPA. So RPA is nothing but it's a rule-based system that mimic human behavior to automate repeatable processes. Like when we say repeatable processes means which are lower, a person with lower skill or a lower capability can do the work. So RPA is very much prevalent in banking and other sectors many years back. And in manufacturing sectors, it is very important because after shared service has come in, RPA is very popular. Foundational analytics. Now, what is foundational analytics? So it interrogates data based on pre-configured queries. Like we have ACL, SQL, data interrogation, and data analysis techniques, which basically sets up part of data based on queries. So the data will be arranged based on the queries. So now what we'll do is we'll see a small video on blockchain, and then I'll take you all as to the transformation of blockchain. How is it disrupting industries, and why is it one of the most important tools for chartered accountants?
Many people think of blockchain as the technology that powers Bitcoin. While this was its original purpose, blockchain is capable of so much more. Despite the sound of the word, there's not just one blockchain. Blockchain is shorthand for a whole suite of distributed ledger technologies that can be programmed to record and track anything of value, from financial transactions to medical records or even land titles. You might be thinking, we already have processes in place to track data. What's so special about blockchain? Let's break down the reasons why blockchain technology stands to revolutionize the way we interact with each other. Reason number one, the way it tracks and stores data. Blockchain stores information in batches called blocks that are linked together in a chronological fashion to form a continuous line, metaphorically, a chain of blocks. If you make a change to the information recorded in a particular block, you don't rewrite it. Instead, the change is stored in a new block showing that X changed to Y at a particular date and time. Sound familiar? That's because blockchain is based on the centuries-old method of the general financial ledger. It's a non-destructive way to track data changes over time. Here's one example. Let's say there was a dispute between Anne and her brother Steve over who owns a piece of land that's been in the family for years. Because blockchain technology uses the ledger method, there is an entry in the ledger showing that Adam first owned the property in 1900. When Adam sold the property to Dave in 1930, a new entry was made in the ledger, and so on. Every change of ownership of this property is represented by a new entry in the ledger, right up until Anne bought it from their father in 2007. Anne is the current owner, and we can see that history in the ledger. Now, here's where things get really interesting. Unlike the age-old ledger method, originally a book, then a database file stored on a single system, blockchain was designed to be decentralized and distributed across a large network of computers. This decentralizing of information reduces the ability for data tampering and brings us to the second factor that makes blockchain unique. It creates trust in the data. Before a block can be added to the chain, a few things have to happen. First, a cryptographic puzzle must be solved, thus creating the block. The computer that solves the puzzle shares the solution to all of the other computers on the network. This is called proof of work. The network will then verify this proof of work, and if correct, the block will be added to the chain. The combination of these complex math puzzles and verification by many computers ensures that we can trust each and every block on the chain. Because the network does the trust building for us, we now have the opportunity to interact directly with our data in real time. And that brings us to the third reason blockchain technology is such a game changer. No more intermediaries. Currently, when doing business with one another, we don't show the other person our financial or business records. Instead, we rely on trusted intermediaries, such as a bank or lawyer, to view our records and keep that information confidential. These intermediaries build trust between the parties and are able to verify, for example, that yes, Anne is the rightful owner of this land. This approach limits exposure and risk, but also adds another step to the exchange, which means more time and money spent. If Anne's land title information was stored in a blockchain, she could cut out the middleman, her lawyer, who would ordinarily confirm her information with Steve. As we now know, all blocks added to the chain have been verified to be true and can't be tampered with, so Anne can simply show Steve her land title information secured on the blockchain. Anne would save considerable time and money by cutting out the middleman. This type of trusted peer-to-peer interaction with our data can revolutionize the way we access, verify, and transact with one another. And because blockchain is a type of technology and not a single network, it can be implemented in many different ways. Some blockchains can be completely public and open to everyone to view and access. Others can be closed to a select group of authorized users, such as your company, a group of banks, or government agencies. And there are hybrid public-private blockchains too. In some, those with private access can see all the data, while the public can see only selections. In others, everyone can see all the data, but only some people have access to add new data. A government, for example, could use a hybrid system to record the boundaries of Anne's property and the fact that she owns it while keeping her personal information private. Or it could allow everyone to view property records but reserve to itself the exclusive right to update them. It is the combination of all these factors, decentralizing of the data, building trust in the data, and allowing us to interact directly with one another and the data that gives blockchain technology the potential to underpin many of the ways we interact with one another. But, much like the rise of the internet, this technology will bring with it all kinds of complex policy questions around governance, international law, security, and economics.
So we have seen how blockchain is disrupting the key technologies of decentralization, the usage of the word trust, and believe me, there was a deadline, I think before COVID, that 10% of the world's GDP should be in blockchain by 2025. So now, Satoshi Nakamoto, he's known as the founder of this blockchain based on cryptonomics. But after this 2008 financial crisis, this particular thing was looked into and innovated. But here, the most beauty part is that there's millions and millions of data, and the data cannot be broken. And there is a confidentiality and check. Everybody can see the data. So going to the next slide, blockchain we have understood. I think everybody knows by and large and now how it works, but still I'm just summarizing. So the process works like this. Someone requests a transaction. The requested transaction is broadcasted to a P2P network consisting of computers known as nodes. Then there's a validation process. The network of nodes validates the transaction and the user's status using known algorithms. Then a verified transaction may involve a cryptocurrency, contract, or a record or other information. After verification, the transaction is combined with other transactions to create a new block of data for the ledger. The new block is then added to the existing blockchain in a way that is permanent and unalterable. The transaction completes here. Now, what are the platforms of blockchain do we have? The most common ones is Ethereum, the IBM blockchain, Hyperledger, Sawtooth, R3 Corda, Tezos, Oisio, Stella, and Quorum. Now, Walmart has been one of the pioneers in introducing blockchain for various informations as well as confidentiality and controls. Ford also uses because of various product codes. We have UPS, DB, and FedEx, the logistics company, which finds blockchain as one of the most useful tool in their business. Now, how to audit a blockchain? So the internal auditor has to first, step one would be to assess the risks and controls, like which are the permission given to whom and in what levels. Then an internal auditor has to customize the software. Means the software has to set up to reflect the company's risk thresholds and to meet the needs of its different users. Third step is installing a read-only mode. Means nobody can edit the transaction. And the fourth step is log and test the transaction. So user testing is allowed in this level. Fifth step comes in providing monitoring and reporting. Now here you can see the reports and the data can be validated and the exceptions can also be flagged. So this is a very important level for internal auditors. And the last step is the refined approach. As risks and control objectives change, the company can adjust the software based on the whatever assumptions it has taken at the time of initiation. Now there are certain disadvantages of blockchain. Blockchain is not a distributed computing system. It cannot work in different levels. It has to work on a specified level based on SOP. Then if you want to increase the scale of blockchain, there are some impediments. Sometimes blockchain consumes too much energy and it's costly. Sometimes it has private keys. So there are certain usage issues. Cost and implementation struggle is always there, for which, and there sometimes it requires approvals from government bodies. So there are delayed installations. You need expertise knowledge. Everybody cannot implement that. It needs a maturity level of the organization. It also needs interoperability. Means your operations should adjust based on blockchain requirement. And there should also be a legacy system, which ideally should not be required. But in a blockchain, you need to have both the data from legacy as well as current. Now, what is the role of chartered accountants in future in blockchain ecosystem? CS can play a role in terms of small contracts and oracles where they can audit these transactions. They can also act as a service auditor of consortium blockchain. They play an administrator function in many companies, and they also act as an arbitration function lead in many disputes. Now, how audit and assurance might evolve with blockchain? As I said in the previous slides, that blockchain brings in a kind of decentralization and trust. Means, and the middle level goes off, as you have seen in the land title. So there are some drastic changes after this 2008 financial crisis. So what does the auditor do? So the auditor or the CPA is left with nothing but continuous auditing transaction using the blockchain. Now, how could he use this blockchain? So he has to eliminate many manual data extraction and audit preparation activities that are labor intensive and time consuming. Then speeding up audit preparation also requires reducing the time lag between the transaction and verification dates. So from the financial reporting system, he has to very carefully trace and flag which are the points, which are the reports he requires, which are the reports he doesn't require. This will save him time. And then how to improve the efficiency and effectiveness of the financial reporting and auditing. So the management of the auditors should focus on the riskier areas, the more complex transactions, while conducting the routine auditing, and the data should be near real time instead of 24 hours or 48 hours old time. Now, one very important concept which has risen along with blockchain and the concepts which I said is AI and others is basically cyber security. I believe cloud and cyber security everybody has heard of, but I just want to assess cyber security still remains a problem. Now, how? Cyber security frauds have reduced a lot. When we say cyber security, what do we mean as chartered accountants? When we say cyber security, we mean data being hacked, accessed by criminals, lost, exposed to unauthorized users. It can be external, it can be internal. Now, this is a board level risk, which is a very high level risk, Many companies have reputation risk as number one. So cybersecurity comes in the top 3 or top 4 risks in every company. Now, the accountability of the business is to protect the data of the company and its access and the hidden information. It should not go to the competitors of the company. So these are very important things. The pricing policy, the quantity which has been sold to X customer should not be known to others, because that will be a confidential issue. And if this data leaks out, the company may have a long forward-going problems. Now, what are the security controls which helps cybersecurity? Now, normally there is an incident response plan which is developed comprehensively by all companies. This is done by the IT department in connivance with the finance department. The CFOs look into this, and the CEOs also overview this once in a quarter. Then there's a patch management lifecycle, which controls things through patches like data patches. Then there's antivirus solutions, as we know. Then there's perimeter defense, which creates an offense to stop any kind of interference from outside. Secure mobile devices, emphasize employee training and awareness, implement power user authentications, strict access controls, very important, and audit trail for this, maintain secure portable devices, and of course, encrypted data and backup data, which should be there in the disaster recovery plan for all companies. Now, the average cost of data breach in US at one point of time was 3.92 million USD. So this is the sort of this is the sort of risk companies have. If they don't fix it in the current period, they may have a huge interactions going ahead, especially the FMCG, the consumer-centric, the retail companies, and the service-oriented companies. They have a high risk from cybersecurity, and of course the banks. Now, there are few vectors of cyber protection. We call them as SAPAs in IT language, where S stands for safety, which is for reliable copy of our data, which remains available. It can be my data in bank. It can be clients' information in auditors' backend data. It can be government's employees' information in government server, anywhere. Accessibility means from which physical location at what point of time this data is accessible. Privacy, yes, I would like, you have seen a few days back, some COVID data has leaked out. And then it comes out who has leaked it, how it has leaked out. We don't know. So this privacy is very important because it hurts my sentiments, whether it's a social site like Facebook or LinkedIn, or whether it's any other site. Authenticity means the backed up data should be exact and unmodified, and there should be one owner, so that there's no confusion tomorrow that if there are multiple owners, then there can be authenticity issues. Means who has the original data. And last is the security. Means the data apps, systems, and cyber threats, what kind of security controls we have put. So millions of dollars are spent by companies into various softwares, which has come up recently. And it has its own plus and minuses, like small companies cannot afford. Big companies also wants to afford it, but this situation changes. Like the controls and risks of today are no further controls and risks after 2 years. So you have to invest very minutely and very consciously on all these CapEx projects. Now, I have brought in big data analytics after this. You may think why? Because big data analytics controls are similar to cyber controls. Like we discussed of prescriptive analytics, diagnostic analytics, descriptive analytics, predictive analytics, and cyber analytics. So these are the 5 analytics what we have. Now, what are the benefits of this analytics? It's similar to cyber, but little bit more pronounced. When we say analytics, means it's analysis of data. Means how through 3-dimensional view I can use the data for my business decisions, for controls, as well as for transforming and predicting data of the future. So these benefits may include enabling real-time continuous data. It can also include efficiency of audits being performed, then taking a deeper dive into key risk areas through data analysis, reducing costs associated with auditing and monitoring, and enabling early detection of potential frauds and error. The first presenter today has focused more on fraud. And believe me, this is one strength of internal auditors, and this would be definitely one area where the company gets nervous and where the internal auditor is the superman for this. So fraud detection is very important, and for this fraud detection, definitely we need to use technology rather than manual controls in identifying and detecting frauds. Now, there are advanced analytics like predictive models I discussed, predictive insights, text mining, analytics, continuous auditing techniques, visualization tools. I would just like to maintain like $10 increase in a particular per ton impact on a product may have, say, how many millions impact on my bottom line. So these are the things what people want to see rather than saying my cost has increased by this much percent or my sales has increased by this much percent. Gone are the days where this kind of analysis was done. Now it's more on what if analysis and simulation analysis. And of course, scenario analysis, which is very important. I think everybody has heard in India, CII does future predictive cost analysis. I don't know how many people of you have gone through this. I have gone through this 3-4 years back. And it's a very good system whereby CII will assess each company based on the costing methodology you're doing in India, vis-a-vis what cost predictive analysis you use. And then based on that, based on cost center wise and process costing wise, they will analyze you, give you a point, and there are benchmark points, and they will give you us bronze, silver, or gold medals. And they will also ask you whether you want to upgrade from bronze to gold, then you have to do this activity. It's a good, I have not seen this kind of model in any part of the globe I have worked for so far, but CII has this kind of model. So these kind of models are very cost sensitive industry, like Birla Group. If you see, their cost of production is always low. Now they have a very, very good observation of costing, that per metric ton and total cost, they are not bothered. They are bothered more on the percentage and per metric ton. So EBITDA, they go one level down, PBT. So these predictive models are very important in finding out what if analysis and where things would go, cost would go if I take such kind of decisions. Very important for top level CFOs and CEOs. Now this big data analytics importance. Why is it important? Something I already told you about predictive models. Now I would like to say big data analytics is important for big companies. Companies like Fortune 500 companies, BHP, Billiton, or say Rio Tinto, or say Walmart, they have billions and billions of data, and in various, say 160 locations, 200 locations. It's very difficult to control cost or analyze the software through one model. So they have this analytics system built into various locations country-wise. Each country will have downline their KPIs. Based on their KPIs, they will have this analytics system built in the system. So the internal auditor is supposed to check this. First, understand this. Understanding takes a lot of time. Then analyze this, and then come with a meaningful solution, which others have not seen or analyzed, because internal auditors have a bird's eye view and they can check from a different angle. And there are a lot of advantages, believe me, in this big data analytics, but there are a lot of loopholes also. Now, how internal auditor can check and control? Now, we call this as ETL process, which is known as extraction, transformation, and loading process. Now, internal auditors can help in automating this data extraction. Like somebody mentioned data mining, data scientist. Now, these are very important functions which has come off, very important. If you see, there's a company known as Grab in Southeast Asia. In India also, the office is there in Bangalore. Now, they have been looking for data scientists, and believe me, the salary is quite abnormal because you don't get resource, and secondly, it's so important. Now, why is it so important? Because even 0.1% of cost reduction or a cost leakage will help the company in saving billions. So that's why these functions are very, very important. So a merge, I would say a mix of finance and automation or some kind of transformation leadership is the leader of the future. So if you want to ask who is the CFO, so a CFO should be a transformation leader, and he should have 40% of his automation work in his portfolio. Means he has to work very closely with the IT head. Sometimes he can be the CIO and CFO also. So very important for internal auditors to check these controls, to understand this data extraction, transformation, and to see where they are missing. Because you have separate KPIs for separate companies. You have profitability KPIs, you have sales KPIs, you have expansion KPIs. In the midst of KPIs, you forget that whether am I missing something, whether I'm manipulating something. Internal audit steps in and traces and identifies these people, the finance head and the CEOs. These are the areas perhaps you may go wrong. These are the areas maybe you're on track. So internal auditors have a very important role. At least I have seen and I have worked with internal auditors, and I see them as a business partnering role rather than a fault finder role. So our job also as head of finance should be to transform the internal auditor so that they can facilitate and help us in delivering this. Now, to support this internal audit, what are the tools required? I'm sure every internal audit has a dashboard and it has a specific risk criteria. They check the risk register, they match the dashboards, they see the reports, and then they see the root cause as to why the problems are appearing. Why is scrap getting sold again and again? How is the wastage percentage increasing every quarter? So they can go a little bit deep and understand how the production happened. So these are the areas where internal auditors can help business. So rather than sampling audit, we are going into automated auditing tools. Through automated auditing tools, internal auditors can catch up the KPIs of business vis-a-vis how they are performing in the last few years and in the recent years and post-COVID, what value they can deliver. Now, what is needed by internal audit? Now, internal auditors need a sound understanding of the organization's data management system. If you don't understand data, you don't understand anything, because there's no tons and tons of reports nowadays available. Then IT application is very important. You need to be tech savvy and perhaps knowledge in auditing database. Yes, architectures and capability in understanding data flow, data analytics in audit methodology. So there should be a hybrid audit system whereby you inculcate some part of manual control, some part of automated controls. And of course, you have the various software. But believe me, in all these, what I'm talking, the COSO integrated internal control framework doesn't lose out. It still will continue to be there and it's still relevant. So companies follow COSO as well as individual internal auditors as external auditors also, the firms who does internal audits on behalf of clients. They follow this COSO and it's very important and it still has its relevance. Now coming to this concept of AI, so we have understood blockchain a little bit, though not in very detail. We have understood big data analytics. We have also seen maybe cognitive and others, analytics. So we have left with AI. So when we say AI, I think everybody knows what is artificial intelligence. I think India is one of the pioneers in artificial intelligence, the way India has implemented the income tax features, as well as the government of India has implemented in various airports, as well as government departments. It's one of the rare things India has done. And in fact, our government of India focuses more on automation. So when we say AI, it's basically an attempt to put intelligence into human being. Means the human model of intelligence is being expected from a computer or a robot. So when we say human intelligence, what do we mean? So it means simulation of intelligent behavior in computers, as well as it also needs the capability of the machine to initiate this intelligent human behavior. All computers may not be able to understand. They may know a repeated way of checking and auditing. So you have to equip them and make them understand. So this is AI. So now who has invented AI? Now very few people knows. In fact, there was a person named Alan Turing, and in 1950, he wrote a paper on computing machinery and intelligence. And he raised one question: can machines think? After that, in 1956, Dartmouth made a workshop and he coined a phrase, a study of artificial intelligence. So AI has transformed over 10 years. Initially, it was Siri and Cortana, which are there in mobile phones. You have video games, GPS, voice recognition, robotics. Google also play a very important role in AI transcendence and deep learning. Now, what is the future of AI? Actually, there is no future of AI. It's unlimited. AI can do anything. In fact, everything is getting analyzed through AI nowadays, and big data. Obviously, if it's data analysis and big data. And if it's technology, it's AI. So when we say AI is very, very effective in medical care and treatment. Nowadays, it's the year of medical, because the sort of vaccines and the sort of medical treatment we have been going through, there's a huge expenditure of the companies. There's self-driven cars, which is very important. Then we have future explorations and ETCs, which are there, through which AI plays a very important role. Now, AI has a lot of pros and cons, as we have said. Though it's very accurate and precise, it has got space exploration, this mining process. It can do laborious tasks at less time. It can detect fraud and manage records. It doesn't have any emotional side. It takes repetitive work through less time. It uses robotic pets and robotic radiosurgery, which is very effective in medical, and it reduces the risk of the company. And it is used for diagnosis and treatment also by the medical people. Now, what are the cons? There's a huge cost sometimes in maintenance and repair. Now, sometimes AI cannot work, and sometimes it has no solution. So we have to wait. It doesn't have human touch. We don't expect it to be. It has a creative mind, but not fully. AI, sometimes people think that they take away jobs, and the abilities of humans may diminish as AI becomes more permanent, and robots may supersede humans. That's the fear. And humans may become more dependent on machines. They may not leave the job of thinking. And if AI falls in wrong hands, it can cause destruction. So typically, many companies try to merge these two, many governments try to merge AI with data analytics. So there again, the SAPAS rules comes in, that is descriptive analytics, predictive and prescriptive. So basically, it stands on the same form of assumption what we discussed earlier in big data. There is a real-time, periodic monitoring and detective controls. So the internal auditor has to go in, understand the system, and he has to have a software which can take the data, put it in real-time form, and put it in meaningful, means basically flagging the red flag items and removing the unwanted report. So AI systems actually enables predictive methods for analytics very fast and in a very technological manner. This is the beauty of AI. And it aims to derive insights from data and propose the best actions in order to take an achieved goal. So the KPIs of the organization get achieved mostly through AI, but AI has its own investment. It has its own pros and cons. Now let us understand, where has AI been successful? Now, Singapore Airlines has employed AI in predictive analytics to enhance their maintenance controls, generating cost savings from preventing flight delays. Even this Honeywell American conglomerate is working with Singapore Airlines to deploy Internet of Things, which monitor a variety of components like wheels, brakes, and which can reduce the risks of the company. Now, the banking sector also uses the advantages of AI. Like UOB, United Overseas Bank, they use AI as its what we call it AML, anti-money laundering surveillance. UOB plans to deepen the way also by exploring deep learning to provide contextual analysis on news articles. These automated and intelligent searches, they can feed into the risk profiles of customers to enhance the KYC process. So very, very effective AI in multidimensional, high volume transactions and in countries which works majorly on digitized data. Now, a very important thing, what we have discussed earlier, we touched on this RPA. In fact, previous speakers also spoke on RPA. So I will not go in explaining what is RPA, but I'll just say that it is a use of software with artificial intelligence and machine learning capabilities. It is for repetitive transactions. And what are the three key technologies? Skin scraping, workflow automation, and artificial intelligence. So RPA is very, very useful, not only in banking sector, though it is prevalently largely used in banking sector, BFSI, but in manufacturing industries, in production, as well as in shared service, it is the need of the hour. And majorly due to increased speed, efficiency, and accuracy. So RPA business processes takes repetitive tasks, as I said, maybe 50 to 60 times whatever transactions happens in a day. And it looks into periodic reporting, data entry, and data analysis, maybe sometimes into AMIS controls also, generating reports, mass email generations, conversion of data formats and graphics, ERP transactions, and process lists and file storage. Very, very important. Where to keep the data, so much of data. Now, if you see the robotic process transformation from the legacy to RP-enabled processing, what are the benefits? So the left side shows what was initially there, and the right side shows what is the improvement. So when we talk of high total cost of ownership due to high resource requirement, there's a cost improvement, and the improvement is around 10% reduction of current costs, minimum. Then typically it takes days and hours in current processing, but in RPA, it takes in minutes and seconds. The error rate in existing time or the existing processing takes 1 to 3% and an ROI of over 300%. But in RPA enabled, the error rate comes down to 0.5%. Then there's limited scaling and flexibility issue in the present system. But if you implement AI, you can scale at any point of time. And then there are compliance issues, which AI does, means RPA does much better. And the staff is now focused on low value iterative processing tasks in the existing process. But in AI, once you have this repetitive process done, you can go into analytics, analysis, and finding out red flag items and focusing on fraud and errors. There are some other emerging technologies which I'll not go further in details, but I'll just say, like they are AR, augmented reality, and VR, virtual reality. Now, AR bridges the digital and physical worlds, providing digital overlay to the real world. VR is fully computer rendered. Now, when we say AR works in a site, in a project, allowing workers to see the exact location, assembly instructions, materials information, warning, and other information associated with the project. So it's very useful for technical and project people. IoT, as we described earlier, it is a network of physical objects embedded with sensors, software, connectivity, and computing capability to collect, exchange, and act on data. Placing sensors on things means the KPIs where you want IoT to think, you place it on those, and IoT works on those. 3D printing, I think many people heard of this. So I'm just giving an example. In gloves factory, there was a disruption 2 years back. Somebody said that if you have 100 lines in a gloves factory, in the future, you can produce millions of gloves in one room by creating one physical glove and doing a 3D printing for the other gloves. This technology is still not approved in many countries and they're still held up. If this comes up, so there would be huge reduction of investments. People may not find jobs in this kind of industry, and the companies with 100 employees can do billions of business. So this is the power of 3D printing. So now I will just ask you to focus on this future. So what is our future then for internal auditors?
Hello, I'm Christopher Polk, Director of the IA's Audit Executive Center. When considering the future of internal audit, there are many answers to ponder on. Audit never sleeps, and the demand for skilled internal audit practitioners are growing daily. We asked a small group of internal audit leaders to share their story and thoughts on the matter. Here is what they had to say.
For the internal audit of the future, I think there's really two groups of skill sets that are going to be really important to be successful. The first is one that's been really true for a long time, which is the soft skills. The ability of people to interact with members of management, the ability to be empathetic to people in situations, those who have courage to be able to take on the hard questions, to ask the hard questions, to give feedback when feedback may not be something which is sought out. The second skill set for the most successful audit of the future is one that's really been emerging over a number of years and I think will only become even more important, which is a comfort level with technology, in technology and data. Clearly, We've been using more and more technology, data analytics, but I think it's becoming even more so. And it's not just the knowledge bases, so that people come in with a knowledge of how to use a particular application or work in a particular ERP, but an overall comfort level with the concept of technology.
I think the internal auditor of the future is going to need to have critical thinking skills, as well as many data analytics skills. It's a very broad-based skill set needed by all our auditors. You know, some of them have that now. It's not just for the future, but I think as we move forward, you're going to see more and more of the broader-based skills, especially in analytics and critical thinking.
A top goal for every internal auditor going forward should become a trusted advisor. This will enhance the value to the organization that the auditor works for. Skills that required will include relationship building, listening, communicating, both oral and verbal, as well as strategic thinking.
What has changed is the ability of internal auditors to adapt themselves to the changing business environment and rapidly changing conditions in the global economy. And in order for internal auditors to be able to add value to their organizations, they need to have the business acumen and business knowledge. They have to acquire that. And they have to combine this business knowledge and with their technical skills, like IT skills, which are becoming more and more important and relevant.
As you can see, there is so much knowledge we can all embrace. If you are looking for relevant content, solution-based resources, training and networking opportunities to assist you and your audit team to be more successful in today's ever-changing business environment, join the Audit Executive Center today.
So we have seen what are the future skill sets required. Soft skills, ability to interact, empathize, courage, to ask hard questions, comfort with technology, data comfort level, critical thinking skills, trusted advisor, relationship building, communication, strategic thinking, business knowledge, and IT skills, which is the most important. So with this, I would like to end the session today. And if you have any questions, please do.
Thank you so much, sir. It was a very informative and a very unique presentation. Regarding the questions, I have a question for Bharat, sir. And they ask, you may have DLP in the organization and strict controls over emails, but how does one prevent data leakage from clicking pictures from screen and sending it across?
That's a very valid question, Rupal. And so basically, frankly speaking, there is no control as such. It's just that, more about the training, awareness, and sensitization about it. Another aspect is that, because of this working from home, there is a business imperative need that people need to work from their homes, and they need to access the office environment systems. In fact, if I go back few years forwards, there were many banking and financial services which never allowed, because of data privacy and information security reasons, to even have smartphones onto the floor. So it's not because of COVID, but even prior to that, with everyone having a smartphone in its pocket, it's very difficult, to see if somebody is clicking pictures from their offices or, even from the comfort of their homes. I think it's more about the training and sensitization, which really helps in this manner.
So another question is the tools for code evaluation that you discussed in your presentation. They want you to repeat it.
Sure. See, herein we are talking about the code evaluation. So as I said, that when we talk about any particular code, we as internal auditor used to consider it as sacrosanct, that it would have gone through a formal change management process, and the business who would have felt the need for a particular code or a change, or who would have requested a change, they would have collaborated with the, let's say, business analyst who would have understood the need, who would have understood the requirement. They have put it a code for it. The developer would have developed the code. Then the independent testing team would have tested the code, that whether it suits the business requirements or not, and then it would have been deployed in the production environment. We as internal auditors previously used to look into some very, very basic aspects. We would see if there are adequate segregation of duties between the developers and the production. We would see, what controls are there in place to ensure that the correct version or the final version of the code goes into the production. We would be seeing, whether UAT has been signed. So the testing team would have signed off something. Basically, they would have tested it, and then somebody senior or appropriate management from the business would have signed the UAT, or basically given a go-ahead to deploy it in the production environment. And of course, in the initial period, there would be some hypercare for any new code or any new change. However, the regulators, again, this is something, when we look towards the future, and since more and more areas are getting digitized, more and more manual processes and journeys are getting digitized, so it's become imperative, to get an assurance on the code. How do you know that the code is behaving appropriately, or there are no suppressions which have been embedded into the code? So it goes one level down, wherein, and again, it depends on the organization to organization, and it depends, not organization to organization, I would say it depends on the industry you are operating on and the expectations of the regulators, or in case, how the risk involved in that particular process. So these codes basically, help you go beyond testing basic aspects of segregation of duty and UAT sign-offs. Thereby, you can test whether the test scenarios which were built by the testing team or which were signed off, whether they were appropriate. Does they cover, let's say if a code runs into 20,000 line items, so does it cover the entire spectrum of the code? In many instances, you will find in current environment, the codes basically, they are various building blocks. So say, for example, you build up something, there will be an authentication module, there will be user registration module, but have the testing team tested all of those components harmoniously, or is it that they have tested certain components only? So this is, the direction of travel. Now you have certain codes or tools which are available, which can help you understand how do you ensure that those testing scripts which were devised, they have evaluated the entire code and they serve the purpose.
So I don't see any more questions, but a lot of requests to share the PPTs from both of you.
Sure, Rupal, sure. We'll send it to the institute. Yeah.
Yes. To conclude the seminar, I shall not be wrong in saying that we all gained a lot of clarity and knowledge on how technology can be embedded and used in our very own area of internal audit. On behalf of Internal Audit Standards Boards of ICAI and the Jalandhar branch of NIRC of ICAI, I would like to extend my heartfelt gratitude towards CA Charanjot Singh Nanda, CA Sonia Arora, the speakers for today, CA Bharat Garg, CA Praveen Kumar, and CA Jayant Chatterjee, and all the members who are present here for the seminar. Thank you for joining.
Okay.
Thank you.
Thank you. Thank you. Bye.
Thank you.
Yes.
Thank you.